Ladies and gentlemen. Oh, good morning, ladies and gentlemen. My name is Dennis Nana Kofi Oseusu. I'm the head of public affairs at the National Teaching Council. But today I am not going to work as the head of public affairs. You can call me your MC. All right, before we go into the program, I would like to give some few housekeeping rules here and then direct you to the place. I think we have our washrooms at this side. And so please, when you see our ushers, they are going to direct you to the place. Now, I would like to welcome all of us to this esteemed program. I want to welcome our speakers, our honorable members in the house, in a special way. This program, it's very, very important to most Ghanaians. And then I will say to our women, because some years back, we know our women to be always known for the kitchen. But then we've gone beyond that. Today, things have changed. I'm sure you bear with me on this. And so the essence of this program is to make sure we also find a digital space where the world is gradually getting to. What is the role of our women? Are we getting them behind? Are we moving with them? And so today's gathering is very, very important to all of us, especially to Ghanaian women. I want to be emphatic because I want my women to be there. Okay? And so I welcome you in a special way to this program. But before we go into the main program, I'd like to invite three personalities to this table. I call it the table in front, not the high table. All right, so at this moment, I'd like to invite Mr. Salifu Amadou, the country director, Ghana Innovations for Poverty Action. Mr. Salifu is the country director for IPA Ghana and previously served as country representative for IPA Zambia. He spent about 8 years at IPA Ghana, progressing from field manager to Northern Regional Manager and sector lead for health, sanitation, and social protection. He has over 7 years of experience managing rigorous evaluations across sectors including education, health, agriculture, social protection, and financial inclusion. Sir Amadou, please, can you take your seat here? Please, let's welcome with a round of applause. The next is Mr. Imran Martin. He's the Executive Director, BRAC International of Governance and Development. Imran Martin, PhD, is the Executive Director of BIGD, leading its transformation into a globally recognized Center for Rigorous Research on Policy and Development. He provides strategic leadership, manages stakeholder relations, and oversees organizational operations. Previously, he held senior roles at Innovations for Poverty Action, Save the Children International, BRAC, and International Growth Center. He is a visiting fellow at LSCE and serves on advisory boards for several global research networks. Imran holds a PhD in economics from the University of Sussex. Please, with a round of applause, let's welcome Imran Martin. We also have in our midst Madam Sabia Aku Bekata. Please, if I'm not able to get it right, forgive me. She is the Principal Program Officer, Department of Gender of the Ministry of Gender, Children and Social Protection. She is the lead and she leads and coordinates. She has led and coordinated national program focused on empowering women with skills to participate in public life. Her work is the work in the ministry helps shape policies that push gender equality as well as translating gender equity frameworks into action. She has been honored for her outstanding leadership and contribution within the civil service space. Please, the only woman amongst the men, Madam Aku, please take your seat. Let's welcome her. I think this gathering is a timely conference, brings together experts, policymakers, and stakeholders to discuss the transformative power of digital inclusion in empowering women and promoting gender equality. I presume that we look forward to exploring innovative solutions, sharing knowledge, and fostering partnership to bridge the digital divide and unlock opportunities for women worldwide. Let's embark on this meaningful conversation and collective action toward a more inclusive and equitable digital future. If you are with me on this, let's open this wonderful conference with a resounding round of applause. So, by way of welcoming us, I would like to invite Mr. Salifu Amadou to do that. Mr. Salifu, please. I think if your mic works, you can use there. All right. All right.
Hello? It works? All right. Thank you very much, Dennis. Distinguished guests from both national and international spheres, development partners, directors and officers from the Ministry of Gender, Children and Social Protection, officers from the Ministry of Finance and other government institutions, members of the civil society, digital innovators, researchers, students, ladies and gentlemen, good morning. On behalf of Innovations for Poverty Action, IPA, I am delighted to welcome you to Ghana for the Access to Agency, Empowering Women Through Digital Inclusion Conference. It's both an honor and a privilege to co-host this event with our colleagues, esteemed partners from the BRAC Institute of Governance and Development, BIGD. Why Ghana? Ghana provides an ideal backdrop for our discussion as we've made impressive strides in mobile connectivity and financial services. Yet, a lot remains to be done to ensure that women fully benefit from the opportunities that these revolutions are bringing. Based on the 2021 Global Findex data, in low and middle income countries, 6% fewer women than men have an account. In sub-Saharan Africa, this gap widens to about 9%. And these gaps represent missed opportunities for women to participate in and benefit from the formal economy, to build assets and strengthen their agency within households and communities. This is why BIGD's research initiatives on women economic empowerment are so important. These initiatives generate rigorous evidence on the effective ways to overcome existing barriers that prevent women from using and benefiting fully from digital services. More broadly, they help us understand the causal pathways linking digital financial services and connectivity to women's economic empowerment, i.e., what works, for whom, and under what conditions. At IPA, these questions are deeply aligned with our mission to produce rigorous evidence that improves lives and drives policy change. IPA has helped develop tools to measure women economic empowerment. Our research has also helped to understand the effects of consumer protection challenges for women. And lastly, we have half a dozen live studies looking at how credit products could be redesigned to support women's productive activity. We're grateful to be part of a gathering where practitioners can engage with the rich insights that BIGD and its partners have developed over the years on complex challenges of digital inclusion. Together, we can bridge the gap between academic knowledge and real-world impact. This gathering is more than a platform for sharing findings. It's about building a community of practice, uniting leading academics, policy makers, and industry leaders from around the world. We hope the connections made here will lead to meaningful collaborations that extends beyond these 2 days. I look forward to rich discussions, innovative partnerships, and actionable insights that will help us seize the digital opportunities ahead. Once again, you're welcome to what promises to be an exciting conference, Akwaba. And thank you.
I'm very sure we can do better than we just did. I always want to have people speak in gatherings like this, brief as much as possible, so that we can have everything. You know what I'm talking about? Yes. So thank you so much, Mr. Amadou, for this short opening address. We are going to pick our next from Dr. Imran Martin. Doc, you have the mic.
Hello? Yeah.
Yeah. Okay. It's not. I'm audible. Great. Thank you very much. Distinguished guests, all protocols observed. On behalf of BIGD, I would like to welcome all of you to today's conference on access to agency. Let me tell you a bit about BIGD, but before I do that, I would like to also thank our co-host, IPA, and the diverse audience we have here, which consists of researchers, policymakers, and practitioners from all over the world. Now, we have a long-standing relationship with IPA. At a very personal level, I also worked at IPA for about a year. So it gives me a lot of pleasure to see us coming together to host this very important conversation. Now, BIGD, we are an institute of BRAC University. So we are a university-based social science research and educational institute. And we are part of the larger BRAC ecosystem. And many of you may know BRAC because BRAC also works in many countries in sub-Saharan Africa, including Ghana. We are really proud to host this convening in Ghana. And as my colleague from IPA said, it is a regional leader, and there are very good practices in terms of digital inclusion and innovation. Ghana also offers a vibrant ecosystem of policy engagement, research collaboration, and gender-forward digital initiatives, and I'm sure we will hear quite a lot about that during the conference. But I think most importantly, the hosting event here is also our intent to deepen engagement with Sub-Saharan Africa and foster much stronger South-South learning partnership. And I think this is a very apt context to really host this, because the history of Ghana with great global leaders such as Kwame Nkrumah, I think very, very strongly positions the value of equitable knowledge partnership and a global Southern power. And I think that gives us a lot of ground to really take that whole idea forward, and hopefully we will talk a lot about that as well. It's great to see we have got keynote speakers, but someone like Professor Ernest Aritre, who has been really forwarding this whole agenda of a global Southern and equitable knowledge partnership from the global South. And I think that will be a very important agenda to really talk about as well. For us, this is a very important agenda, clearly, and we have been working in the area of women's economic empowerment and digital inclusion. But I think what is really important is through this initiative of We Define and We Connect, we have been supporting almost over 35 studies across South Asia and Sub-Saharan Africa, where we are trying to rigorously examine the causal linkages between women's economic empowerment and digital inclusion. And I think these type of understanding of causal mechanisms are extremely important to come up with the right type of interventions and the right type of design features that can actually work. So I think that's really, really important. Today's conference is about access to agency. So we really want to talk about how do we move beyond simple access to actually meaningful agency. So what we're really interested in, not only how digital technology reaches women, but how to empower women through digital inclusion. So that is a fundamental question we are trying to really explore through rigorous research. What works in terms of not only access, but actual empowerment and actual agency. And we will be discussing concepts and measurements, but also how these concepts and measurements can be translated into specific outcomes. And we'll also examine sector-specific interventions, and finally conclude with critical look at risks and safeguards. So I think the conference actually provides quite a comprehensive framework for us to take this whole agenda forward in a very practical way. And I hope that we will critically engage and share generously and build meaningful collaborations to push this critical agenda forward. Thank you all very much. Akwaba.
Thank you very much, Doc. I would like to also invite Madam Aku. I think I'm so familiar with Aku, to help us with the next speech.
Thank you, Dennis, for the opportunity. The founder of Innovations for Poverty Action, the Executive Director, BRAC Institute of Governance and Development, the Country Director, Mastercard Foundation, our development partners, members of the academia here present, our friends from the media, distinguished invited guests, ladies and gentlemen, good morning. I bring you warm greetings from Honorable Dr. Agnes Namomo Latte, the Minister for Gender, Children and Social Protection, who could not participate in this very important conference due to her engagement on an equally important national assignment. She has asked me to extend her sincere apologies and requested that I read the statement on her behalf. Therefore, I read the statement. It is a great honor to deliver a statement at this August conference, which seeks to bring together researchers, policymakers, and donor organizations under the theme Access to Agency, Empowering Women Through Digital Inclusion. The theme for the conference is timely and appropriate, as it draws attention to bridging the digital divide and ensuring that women and girls are empowered and protected in this digital age. The conference is necessary in our time, as it aims to explore the positive impact of digital inclusion on the empowerment of women and girls. Distinguished ladies and gentlemen, the use of digital technology among women, especially those in the informal sector, is on the rise and is gradually becoming an integral part of their daily activities. The internet is not merely a channel of information. It offers women with several opportunities in areas such as education, employment, market, health, politics, entertainment, and socialization. By accessing this information, women can enhance their well-being and economic development. Distinguished ladies and gentlemen, even though the digital environment has become invaluable in the lives of women in conducting business, it can equally pose significant threats and lure them to become victims of cyber crimes, as well as groom them to become perpetrators themselves. This calls for stricter attention from government and other relevant institutions. It is for this reason that we commend the leadership of BRAC, Institute for Governance and Development, and Innovations for Poverty Action, for their commitment to providing a conducive digital environment. Their efforts at empowering women to improve their livelihoods and actively contribute to national development is commended. Distinguished invited guests, the government, through the Ministry of Communications, Digital Technology and Innovation, has established a National Cybersecurity Center, as well as appointed a National Cybersecurity Advisor to strengthen the protection of women and girls in the digital environment. Again, their mandate has been extended to coordinate cybersecurity in government and across sectors with the goal to eliminate all forms of violence and discrimination against women and girls in the digital space. Ladies and gentlemen, the Ministry of Gender, Children and Social Protection, through the Parliament of Ghana, passed the Affirmative Action Gender Equity Act 2024, Act 1122. This act provides the legal framework to effectively and efficiently address gender imbalances in economic, social, and educational spheres, as well as to ensure equal participation of women and girls in decision-making processes to drive positive change. In addition, the ministry has taken steps to review and update the national gender policy to create equal opportunities for all and improve the educational, social, legal, civic, political, economic, and cultural conditions in Ghana. The revised policy incorporates current development trends such as ICT and internet use by women to ensure it is responsive to the emerging gender issues. Ladies and gentlemen, I would like to reaffirm my ministry's unwavering commitment to enhancing policies and advocacy efforts that strengthen the digital rights and promote the empowerment of women. As leaders, researchers, policymakers gathered here today, let this conference serve as a renewed call to action, a reminder that everyone matters in the development agenda and that no one should be left behind because of their biological identity as female or male. Once again, I would like to extend my sincere gratitude to BRAC Institute for Governance and Development and Poverty for and Innovations for Poverty Action for their immense support and commitment to shaping a more inclusive and equitable digital space. I thank you all for your attention. I wish us all an insightful conference. Thank you.
All right, please, we can do better than what we just did. Thank you so much, Madam, for this wonderful speech. It tells you that the ministry is also looking at how best they will help women in the space we are talking about here. We are moving into taking our keynotes, addresses, and the first presentation is going to be on research and practice, that is digital inclusion as a pathway to women's empowerment. And this is going to be done by Professor Dean Carlin. He's a professor of economics, Northwestern University, co-director of Global Poverty Research Lab, and founder of Innovations for Poverty Action. Prof. Dean is the Frederick Asa Memes Distinguished Professor of Economics and Finance at Northwestern University, co-director of the Global Poverty Research Lab, Northwestern University, and founder of Innovations for Poverty Action. Prof. Callan recently served as the chief economist at the United States Agency for International Development. He is also a member of the executive committee of the board of directors of the Massachusetts Institute of Technology based Jamel Poverty Action Lab, and a co-founder of Impact Matters, a nonprofit focused on evaluating charitable impact. His research employs experimental and behavioral methods to address global poverty, with work spanning financial inclusion, agriculture, entrepreneurship, and health across more than 20 countries. This man we are talking about is a guru. I'm sure you can see all the attributes that comes with him. So with a round of applause, let's invite Professor Dean Carlin as he presents. So please, our men here will join so that they can be part of the... Yeah, you can use them.
Are these supposed to be on? Are they on? Oh, it is on. There we go. Hello, everyone. It's a real pleasure to be here with everybody and a big honor. I always love coming back to Ghana. I don't do it enough, if nothing else, just so I can go to Wooden more. The strange thing about being a professor, I find, or one of the strange things, is that people often ask me in the context of a keynote, you're expecting me to give you pearls of wisdom here. But the reality is I chose to be a professor because I recognized how little I knew. And I wanted to learn more, not just for the sake of learning, although yes, I'm a curious person, but because I see that gap as an important path to policy. And in some areas we know more than others, and we've learned a lot, and some areas are more difficult to learn than others. This is one of those areas. This, the issues around gender norms and how the intersection between finance and gender is the poster child for it depends. But that doesn't mean we should give up on research and say nothing, what can we really use from what we've learned? If anything, it means we should double down and do more. Okay, that's my, if you need to leave now, that's my main kind of sentiment. And this is not working. Do I have a, oh, now it does. Oh, wow, okay. This is hard to do the thing where I save my slides. No. Is this just lagging or is someone else controlling it? We've now skipped a whole bunch. What am I supposed to point at? It's nope, that's going forward. This makes it hard to read my slide while I present. Okay, so I have two takeaways, both labeled number 1 in order to signal priority or to be a typo, your choice. The first is, this doesn't feel on though. There we go. Okay, there we go. Oh, now much better. One of the lessons that resonated a lot when I was at USAID, and our role at USAID was very, in some sense, similar to this conference. The role that I was playing at USAID was to, first of all, we were like running an entrepreneurial startup within USAID. There had never been an office of the chief economist before. So we built it up to 32 people. Now it's down to 0. But our main goal, or one of the main goals, was to help USAID use more evidence of what works and what doesn't around the world in terms of deciding what it should do, how it should do what it does. And one of the first areas that we got involved in was the intersection of gender and agriculture. And as many realize, there's thank you. There's a large, there was a large push for gender-focused programming, but there's often an instinct to just take a program that was going to happen as designed around the other sector, whether it's ag or finance is relevant here, and then just say, no, now we're reaching women. And one of the consistent lessons that you do see, again, there's always exceptions to everything. The it depends clause you can attach to everything was that if that's all you do is you take a program that was going to just be offering agricultural extension work, for instance, in the farming that we did, and then just reach women, you're not going to achieve the goal of actually helping to promote women's roles while also through the vehicle of agriculture. There had to be some link that actually also shifts the power within the women so that she actually keeps the money from the agricultural income in that example. And so the basic point is that there's a lot of policies that are targeting women by simply taking whatever was being done in the other sector and saying we're reaching women. And that doesn't usually tend to generate the results one wants. Similarly, intent alone is not enough. That it's really easy to say we aspire for this program to have that effect, we aspire for this program to have this effect, be motivated by good causes, motivated by a strong sense of human rights and intention. And unfortunately, that is not enough. Sometimes that works, sometimes it doesn't. that we need to be willing to take some lumps and learn that things don't always work. And so, the second main takeaway is that the issues that women face, while there are some consistencies around the world, and I'll show you some kind of global statistics, the reality is that the norms that dictate the woman's role and the things that are the constraints that hold back women from seizing the same opportunities that men are able to seize do differ, and the path to changing them differ around the world. It doesn't mean there aren't going to be some lessons that we can learn from one place to another, but this is going to be much more new. The lessons that we need to learn are going to be inherently much more nuanced than other areas where it's like agricultural extension is also something that's complicated, but in some level less nuanced, I would say. I did it. Okay, so don't click twice. You just have to wait. So a few high-level statistics just to share. First of all, globally there's 2.4 billion working-age women that lack the same economic rights as men. This is from a World Bank, very large-scale study across many, many countries. There's fairly consistent evidence, and obviously this is going to vary depending on the rules and norms in different countries and regulatory policy, but women typically do not have the same access to credit. And that sometimes happens very much so because of laws in the country that actually work against them. Things about inheritance, things about collateral and ownership of property and things of this nature. And that many of the systems then, even once those are in place, if they do have ownership, they still don't have the same access because of the way banks might be issuing credit underwriting policies. And then the social norms are are key pressures that exist that constrain women both in terms of the occupational choice, so there's maybe more likely a mismatch between their skills and what they're able to do, and also just the other demands on them. Childcare is a common example used. Frankly, this is used in the United States just as well as in developing countries. But if you provide business training to a woman or access to capital to a woman, in the case of something we're talking about here, for the purpose of investing in small enterprise, but she also is responsible for taking care of the children, that's obviously a constraint that is going to get in the way of her being able to simply do the best she can earning money with that capital. I did click, now just waiting. There we go, okay. Oh, okay. So there's, one of the policies that I understand is of high interest in the government in Ghana and many places around the world is to how do we help foster women-led entrepreneurship, specifically through the digital space. Now, what's exciting about the digital space, and I'll get to this more later, is that it lowers the transaction cost. When we think about economics, when we think about market failures and why aren't people able to borrow if they're good credit risk, why doesn't a bank lend to them? And one of the wedges that is traditionally there is simply transaction costs, that it costs too much money to go to the bank to go to them, or for the bank to monitor and enforce, and all of the various things that go in with a loan. Now, a digital wallet doesn't solve all of the problems, but it does radically lower the cost of doing business. And so that's on one hand very exciting. I'll get to an example later that I think of that as also very scary. When you have that quick access to credit, it leads people prone to mistakes. But ultimately, there's a whole series of policies one could take in furthering digital access to women to help start enterprises. And ultimately, the question we need to pose is, what does the evidence say? And what do we need to do to get beyond merely targeting and intent? Are these? I feel like, I think we might have a goof. Were these? These are just going live from the Google Drive? What's that? Okay. Okay. A couple examples I want to share with you on examples of a shift to digital and how it can lead to some changes. These are changes that I think you can construe as important, but at the same time, think of them as large but small, is the way I think of them at least. So the first is, and a lot of it is about the idea at some level, is that by providing access to, yeah, I think, sorry, I'm thinking these are not the right slides. Can you give me 1 second, people? Apologies. Yeah, these are not the right slides. Did you? Okay, apologies, everyone. I can keep. I can keep talking through until that's up. So. So the other. Well, actually, let's just wait 1 second. It's 2 seconds. pushing, right? You could get a little bit confused, right? The person at the top is a perfect example of correlation. They're pushing, and the truck's moving. But clearly, the person pushing has nothing to do with the truck moving. But if all you did is observe that they're pushing, and the truck is moving, you would conclude that, oh, that person's doing a lot. Whereas the person in the back, that's the causal one, right? And the basic point I want to drive home with this is simply that correlation can be very deceiving. In the context of gender, the single, I think one of the most common ones as a policy that we see is financial literacy. Now, we know that financial literacy is correlated with women having more power and with people making better financial decisions. It's almost definitional in a sense. But that doesn't mean that a policy to try to move financial literacy will increase women's power and will increase lead to better financial decisions. Now, there actually is some positive evidence of financial education, to be clear, but the evidence is much weaker than the rhetoric and the passion behind it. And the third thing that is the unfortunate reality in the case of gender is that there's a lot of times mediating and unwinding effects that take place. Mediating, I think, to Simone Schainer's dissertation, actually, I think it was your dissertation, right? Where there was about providing ATM cards to people where the idea is maybe they could hide some effective money, but it was not effective for women, basically. It was, they weren't able to actually use the card to exert power, and quite the opposite. Those without power were not able to use the card, right? So there can be mediating factors. Tell me if I summarized that right. Sort of, close enough. There also can be dissipating effects. So in a graduation model, something that we did in collaboration with BRAC around the world, where we've tested a very similar model of social protection that provides assets, cash, sometimes in kind, as well as training and access to savings. And we find this nice increase in women's power in 2 years that then dissipates some in 3 years. So what's going on in that dissipation? I don't know. One argument is that it's a clawback problem, that it's really hard to change social norms, and if you change something a little bit for the women that gives them more power, then in the long run the men notice and unwind it, because you haven't changed something at the heart, at the root in society. I don't know if that's right. I want to be clear. Like that's not something that's easy to pin down what was happening, but I can tell you that in the longer run we saw those effects dissipate some versus where they were initially. Okay. So that might make you sound negative. So now I'm going to try to sound a little more positive. Now we have the delay problem, but I think I pushed it. We should be good. Maybe do you want to just control it directly? Okay, so I'll just flag when I want it. So here's a study that integrated mobile money into a lending process by basically making it so that the loan was dispersed via private mobile money. The idea is pretty straightforward. Let the individual have private access to the money. That's almost, in a sense, easier to hide if they want. And what happens? This was done as a randomized control trial in Uganda. This is to get at that correlation causation point. By doing it as a randomized control trial, we can then establish a cleaner case of whether that change causes other changes to happen. So among 3,000 female entrepreneurs, what we see is a 15% increase in business profits, 11% increase in the value of business capital. So that's a pretty important change that does take place. It's and then secondly was tested. Go ahead. Oh, I hit the button. I shouldn't have done that. Sorry. Go to the next slide. Okay. So, and the secondly was tested encouraging women to make the weekly loan repayments via mobile money instead of via cash. Again, the idea is that maybe this is a way of kind of pulling money out a bit, although it's the repayments. And this was done in Tanzania. And 64% did actually do some of this, so there was adoption of using the money and some demand for it. But it led to only a 7 percentage point increase in women reporting control over their own income. Now, I say only, but I don't know how to scale that, to be fair. I don't know whether to think of that as big or small, but in the grand scheme of things, let's just say it wasn't taking 15% and moving it up to 50%. It was a 7 percentage point change. But this one did not lead to the changes in the business outcomes that were desired and targeted and that were found by changing where the proceeds of the loans go. Go ahead to the next one. And then in Nigeria, there was a test done by testing out digital loans via a smartphone application. Now, we've seen a lot of these types of interventions around the world now, and it's getting to be fairly exciting, I think, but what I'm waiting to see is some kind of aggregation of what we're learning from all of them. Whoops. Okay. So here the test was about an auto-approved process versus a standard approval that where there was a credit score, and if they were just above, they received the loan. If not, they did not. And so in both of these different treatment groups compared to not, we do see this increase in borrowing, but it did not have any effect on women's economic empowerment. And so this is a good example here of something that I would say was just merely targeting women. And it goes to that point that says if that's all you do, it's not to say you will never find the effect that you desire, but this is a good example of a case where it did not lead to the change in female power within the household merely by giving them access to credit or stronger access to credit. Go ahead. So, and there's many more. Obviously, this is a short talk and not intended to be a complete synthesis of all of the work in this space. So I picked a few in order to kind of highlight some interesting results that are actually, in some sense, do have some contradiction to them in the sense of that linkage between a strictly finance intervention that is not inherently gendered, and yet looking at what does it do to gender issues. So, sorry. So my takeaway as I started was that we need to understand a lot more better, and that's not just coming from a global understanding, but very much from a collection of local studies. Everything is always ultimately at some level local study, but part of what I mean by this is, we're going to be a little bit less fast to say we learned something that works in Venezuela or Ecuador or Peru, and we're going to move it over to some other part of the world and think that it translates. Even within a country, you're going to find some differences, and we need a better understanding of how to do those diagnostics to understand in order to then set policy. And so social norms are complicated and varied, but yet if we understand something more about what the specific nature is of the constraints, that does lead to some policy. We don't have to be completely bespoke, every place is new, we can't use any kind of broad lessons. As an example, the occupational choice is an issue which permeates a large part of the world. Now, it might be different in different parts of the world in terms of what it is. Maybe it's what type of crop you can grow. Maybe it's about consumer-facing enterprise versus not. There could be differences along those ways, but the basic principle of occupational choice being a constraint is something that is consistent across. The basic issue of childcare is consistent across. That might vary depending on family structure in different parts of the world, but that's the kind of thing that you can think about up front, look for and identify, and then you can listen to policies in other parts of the world that look into childcare and think about, okay, what did we learn from those policies over there? And that might very well translate here. So while it is complicated, it is true, it is yet vague and not prescriptive, but there are some patterns that do emerge. And this, in my view, makes the returns for evidence that much huger. The two key mistakes that I want to try to avoid here. One goes back to the theme I mentioned earlier, correlation versus causation, and not letting us get too excited by observing correlations. If anything, see them as motivational sometimes and hypothesis forming. But remember that at the end of the day, we need to just put our ideas to the hard test of actually finding out, does this policy work to move the needle in the direction we want for whatever it is we're trying to accomplish. And the second key mistake is assuming that just merely targeting or merely intending to do good, intending to have a change, is not enough. And the answer to both is about finding out, does this policy work in this place or not? Simply put. Go ahead. Can you? Okay. So, to wrap up, digital access is, goes back to economics 101 about it's lowering the cost of digital access. That's lowering the cost of savings. It's lowering the cost of borrowing. This is exciting, and it leads to huge opportunities. It also does have a unique feature for intra-household and collective issues, which is that it does potentially create some pathways for hiding resources, which can, for obvious reasons, might be something that is that can be used to further the goals of equity. There is an issue, though, about getting kind of 3 clicks to a loan and you get access to credit. That's exciting and scary at the same time. I know I've made tons of financial mistakes by just doing something too fast and then regretting it and realizing that had I just read that better, I would have not done that thing I did, or I would have paid my bill differently or done something, whatever the case is, right? And so now imagine how easily one could take out a digital loan that has an interest rate that you didn't fully realize, that has a penalty of late payments that you didn't fully appreciate was going to be so high. And that's scary. So this is, for those who are here from the Ministry of Finance, this is a call to action for you to engage in consumer protection. And I don't have a perfect answer for you for how to do that. All I can say is that's something that needs testing. And for women in particular, it might be that much more important, because women already start off with less access to credit. And so that initial on-ramp into financial markets might be all the more important in order to establish a good relationship and take out loans that are healthy and appropriate for them. It does remind me too of kind of the early days in my career in microcredit, when microcredit was still an open question, or actually, by many of its advocates were sold as like the solution to solving poverty. There's a more modest version of it, which is it expands choice and expands freedom for people, which is basically where the evidence came down, as not a poverty alleviation tool per se, but something kind of somewhere in the middle. But what was striking to me is that throughout, it's always had this rhetoric around also empowering women. But yet, if you take out a really high interest rate loan and you're having a hard time repaying it, that doesn't empower you. That disempowers you. You're now subject to those around you to help you repay this loan or suffer the consequences of default. That could lead to some really bad outcomes on a personal level. So it was, for the very reason that places were often targeting women under the premise of higher repayments, higher value of that relationship. They don't have good access to credit, so they are more likely to go through anything they can do to repay that loan. But anything you can do to repay a loan could be very dangerous. And so that always is a bit of a very odd argument in my view that was made 30 years ago, and I still hear today as issue credit, when you really have to ask yourself, okay, what are the terms of this credit? Are they going to understand them? And what is their protection if times are bad, in terms of grievance, in terms of poor actions from lenders to demand repayment, or just overburdening them? Maybe the lender isn't bad per se, but just overburdening them with a debt that they cannot repay, and then they have to turn to the men in their lives and beg them for money. And that obviously has its dangers. Okay, so 3 clicks is exciting and yet scary, but it should be manageable. That's a call to action for Ministry of Finance to think about what those regulations are in order to protect women, in order to protect anybody, actually. That's true for anybody, but I think because of the vulnerability women face, it's particularly important to make sure that there's process in place for them to make sure they understand the loans, we understand what the costs are, understand what we're getting into, and that there's a pathway to filing complaints and things like this of actors. So the broad lessons I want to leave you with then are threefold. One is correlations can be deceiving. We do need more causal studies, and this is an area that we're going to learn less from we're going to learn less from outside than we do from locally, even more so than some other areas in the world that are not so tied up in social constructs and social norms. The second is that targeting and intent does not typically do enough for what we care about. And the third is we need to be careful about mediating effects. Who is it helping? Is it helping the people? If we're trying to do something to increase power for women, does it actually increase the power for the women that need it the most or not? And is there a clawback problem? What happens in the long run? Have you really done something to change the underlying fabric of a way a woman is relating to those around her? Or is it a temporary change that might risk being clawed back? Next slide. Oh, last slide. Sorry. Okay, thank you, everybody.
Did I hear you say Asa? Dean, did I hear you say Asa? Okay. On what to say? Okay. I don't get him. All right, so we are going to break for tea. But before we do this, there's an exhibition center here where you need to go and then look at some of the things that have been exhibited. But that is not all. We all have a role to play. We are going to vote for our best 3 booths. And so a QR code will be provided where you vote. And then after the main event today, we have judges who will go there and then finalize everything. And tomorrow, we are going to give them awards. And so your vote really matters. So let every vote count. So you say it after me. Let every vote count. Oh, I'm talking to you. Yes, so please, don't say we won't vote like we did in December. This time we are voting, okay? All right, thank you so much. And so, thank you for this wonderful research. I think things are happening with our women in the world. Looking at the percentage and everything, it shows that there are so many things that we've had to disadvantage our women. And so if IPA is fronting such an initiative, then I think we all have a role to play. So coming here, everything that we need to do to support this in a form of question, contributions, let's do that so that we can all be on the same page. Now we are breaking for 25 minutes. Yes, 25 minutes. So we are coming back at exactly 11 o'clock. We do the tea, same with the exhibition. All right, thank you very much. Please give us Ghanaian tunes.
We can talk about it then, 'cause I've had a drink too many, and my troubles, well, I ain't got any. Why can't you wait till daylight? 'Cause things will seem so much clearer then. I'm tired and my eyes are weary, and I just want you lying here with me. So close your eyes, I'll make it oh so nice. Now I don't wanna think about what we've said, and I don't wanna know why we hurt ourselves, 'cause I just wanna hold you so close to me. Yeah, you know it'll take care of itself when I wanna sleep. Wanna sleep. Let me sleep. Why can't you wait until next time? 'Cause that time may never come. Stay here with your arms around me, 'cause you're going nowhere without me. So close your eyes, I'll make it ooh so nice. Now I don't wanna think about what we've said, and I don't wanna know why we hurt ourselves, 'cause I just wanna hold you so close to me. Yeah, you know it'll take care of itself when I wanna sleep. I wanna sleep. Why can't you wait till morning? We can talk about it then. These things will seem so much clearer then.
And to you, with you.
All right. Please, we all welcome back from the break. Those outside, kindly take your seats. We are about entering into the next session of the program. Ushers, please, can you direct those outside to take their seats as we move into the next program? Now we have a research that will be presented by, like I said, most of the names, if I'm not able to get it right, forgive me, okay? I think it's Kim Cole, right? Yeah, yes. And Kim is the director. We define and we connect at the BRAC Institute of Governance and Development. Kim leads the BIGD's We Define and We Define Connect initiatives, which advance research on digital inclusion and women's empowerment. She has a decade of experience in economic development and gender equity. With previous roles as social impact, IPA Ghana, and the World Bank, Kim holds degrees from Harvard and the University of Pennsylvania. All right, so Kim is going to present on advancing knowledge on women's economic agency. So, with a round of applause, let's welcome Kim as she does at Diana. So, Kim, this time you'll be here so that you can be reading. So please, can you make the other mic available so that she can stand here and then still read? Because I saw that Dean was struggling a bit when he was here. All right. Okay. I'm trying to confuse them, don't worry. I mean, he should hurry up.
Thank you, Dennis. Can you hear me? Great. All right, hopefully I'm visible as well. Good morning, everyone. Ladies and gentlemen, distinguished guests, all protocols observed. Thank you so much for being here today. We have guests joining us from all over Ghana, and in fact, all over the world, from places as far as Bangladesh and Southern California. We are so happy to have you all with us today. And on behalf of BIGD, I'd like to thank our fantastic partners, Innovations for Poverty Action. Today, I will be sharing the We Define and We Connect initiatives and the research that we're generating. And we are at the BRAC Institute of Governance and Development at BRAC University. Next slide, please. Great, thank you. Now, We Define and We Connect are research initiatives that aim to generate comprehensive bodies of evidence on the intersection of digital financial services and women's economic empowerment, in the case of We Define, and digital inclusion more broadly, and social and economic empowerment in the case of We Connect. Both of our initiatives fund rigorous research on these topics, guided by our initiative white papers, which not only synthesize peer-reviewed and gray literature, but also present our own intellectual frameworks. And we have a geographical focus in South Asia, Southeast Asia, and of course, Sub-Saharan Africa. Next. There are a few factors that make the We Define and We Connect initiatives a little bit different than most development economics donors. We are in fact based in the Global South in Dhaka, Bangladesh. We also help teams prepare competitive proposals. For example, we offer one-on-one coaching calls, both technical and financial. We incubate high potential proposals, and we offer feedback calls to all proposals, irrespective of how far they advance in our process. Both initiatives have also established best case practices with regard to inclusive funding in the development economics research space. And of course, we support both quantitative and qualitative studies, and we champion the merits of mixed methods approaches. Next. Over the past 5 years, we've released 6 calls for proposals, and we currently have a portfolio of 35 studies in 11 countries. This portfolio is valued at $4 million, and we're not done. We're still working on funding more studies. Our portfolio is well posed to speak to a variety of themes that we'll discuss over the next 2 days, but I wanted to give you a sneak peek on just 3 that will be discussed together. Firstly, as you will probably see in our academic program, We Define and We Connect speak to innovative means of measuring women's economic empowerment. We'll also take a look at the short and long-term impacts of smartphone distribution programs. And lastly, we're learning a lot about the merits of cash versus mobile money. Next. I mentioned that we really prize best case practices with regard to inclusive research. We seek to level the competitive playing field for academics that are often excluded in this process. And to this effect, I'm proud to share these statistics. 86% of our studies include a female academic, and 71% include an academic from the study's country of focus as a lead PI. 69% include an early career academic, and importantly, 43% of our recipient institutions, meaning the institutions receiving funding, are either headquartered or incorporated in the Global South. Next. I'll shift gears a little bit and give you just a sneak peek in terms of what we'll be learning over the next 2 days together. As you'll see in our program, we have a session focused on the conceptualization and measurement of women's economic empowerment, which we know is absolutely critical to develop standard metrics to benchmark we across contexts. But what we're learning from our portfolio is that sometimes standardized metrics may miss very important cultural nuance. We'll hear from researchers in Uganda, rural Uganda, that increased decision-making power, which is often very positively associated with women's economic empowerment, actually had a negative correlation. As women took on more responsibility, had more decision-making power, they actually felt more stressed and thereby less empowered. Also, traditional measures do not capture the fluid nature of Ugandan households, whereby many individuals are in flux, they come and go throughout the home. Thereby, individual pressures on a given woman change over time, thus influencing her economic decisions. The takeaway here is that quantitative We tools should be rooted in a deep understanding of contextual realities, and thorough and thoughtful qualitative research is an effective way to do this. Next, please. In another study, researchers in Bangladesh found that survey question framing can actually lead to significant bias in estimated relationships. More specifically, researchers found that when a statement about digital financial services was simply worded in a positive tone, individuals had a statistically significant increase in their trust levels regarding digital financial products. The converse was true as well. The exact same statement, when negatively framed, actually resulted in lower trust levels regarding digital financial services. The takeaway here is that randomizing statement framing across respondents can help account for framing bias in quantitative estimates, including the many questions that we use to develop We indices. Next, please. The We Define initiative is proud to support, to our awareness, the only 2 long-run impact evaluations of smartphone distribution programs. And we have researchers from both studies here today. They will tell you more, but as just a very sneak peek, In the short run, it appears that smartphone distribution programs can be a promising approach to increasing women's access to DFS. We'll see that in India, researchers found that the Sky program reversed gender gaps in device ownership in the very short run, and even started to shift very sticky gender norms regarding women's phone use. We'll see that in Malawi, a smartphone distribution program in tandem with training on DFS, either as an individual woman or a woman with her spouse, significantly improved women's connectivity and financial inclusion when compared to women who simply received an unconditional cash transfer valued at the same amount as the smartphone. Next, please. The longer term is a little more complicated, as we'll see. In short, addressing smartphone access and affordability constraints is simply not enough to close gender gaps in phone ownership, access, and use. So in India, researchers found that men quickly made use of these phones, and after 5 years, researchers observed minimal impacts on important indicators such as women's phone ownership and use, and of course, gender norms. However, in Malawi, after about 3 years, women who received smartphones plus were trained as an individual, as opposed to with her spouse, actually significantly improved their digital capabilities when compared to women who simply received the cash transfer and women who received a smartphone plus training with her spouse. In short, researchers found that in the latter two groups, benefits actually primarily accrued to men, once again. Next slide, please. So what this means in tandem is that programs designed to increase women's meaningful access to devices have to go further than simply getting smartphones in women's hands and keeping them there. We have to start to meaningfully address barriers such as digital literacy, financial literacy, and of course, gender norms. Secondly, digitally empowering women through direct and individualized approaches, as opposed to more indirect approaches or more collaborative approaches with a spouse, may in fact be more impactful in the long run for promoting digital inclusion amongst women. Next. We're also learning a lot about cash versus mobile money, which is increasingly important as a number of institutions seek to shift from cash to digital, particularly in the global south. In Bangladesh, researchers found that female domestic workers, when they received digital wages and mobile money training, improved on a variety of economic indicators, such as wages earned, hours worked, and their knowledge of mobile money. In Uganda, researchers found that transfers via mobile money were more effective than cash transfers at improving women's decision-making power and independence. However, joint cash transfers, meaning the spouse was also aware of the cash transfers, were more effective at reducing intimate partner violence. These results suggest that there may exist a very important trade-off in benefits regarding these two modalities. Next, please. Lastly, in Tanzania, researchers found that switching from cash to mobile money for loan repayments, again, improved a variety of outcome indicators for women, including their comfort with DFS, their use of DFS for other types of transactions, and importantly, their levels of economic empowerment within their households. When we take these findings together, we can ascertain that mobile money, when compared to cash, can advance women's economic empowerment, primarily through the mechanisms of improving a woman's decision-making power and financial control. Researchers may note that privacy is not a mechanism listed here, and many of our researchers, particularly tomorrow afternoon, will address this particular mechanism through their research. That said, there are some very important caveats. DFS training is crucial, and preliminary evidence suggests that a certain level of existing familiarity with these products may actually be a prerequisite for women to benefit from many of these types of interventions. And importantly, as we're hearing a lot today already, it's imperative that as we increasingly shift over to digital, that we're taking careful measures to safeguard and protect women who may be vulnerable in the process. Next, please. Looking forward over the next 2 days, I am so excited to be able to engage with you and also for you to have the opportunity to engage directly with our researchers who are conducting this fantastic research and learning these insights. More broadly, the WE initiatives are looking forward to bringing to you this calendar year a synthesis paper sharing what we're learning at a portfolio level. More broadly, we'll continue bringing dissemination events to you, both in person and digitally. And of course, for the researchers in the room, this may be of particular interest. WeDefine is shifting over to a rolling expression of interest process, so you can apply for WeDefine funding on a timeline that suits your work. Next, please. Thank you.
All right, thank you very much, Kim. We are not picking questions at this moment. We are going to have a panel discussion, and this is going to be chaired by Imran Martin. So please, I'd like to invite you, then invite your panel members as you take us to the next session. Please, let's appreciate him as he comes. So you're going to use that side, yeah. Then I think we need to add on more chairs. More chairs, there are 4. More chairs, they have to add here. Please, can we add on at least 2 chairs? Because there are 4 in here. Please, can we get 2 more chairs?
Oh, I see. Okay. All right.
All right, that's right.
Okay. So, there are presenters here. I don't know who is going to be joining me here, but we have Kalyani Raghunathan. Please. We have Amnesty Lefebvre. I think she's joining us online. Is that correct? Okay. All right. We have Scott Graham. Thank you. That's it, right? Okay. Okay, great. Thank you. So this panel session actually goes right at the heart of I think the first order question that I think draws a lot from the previous presentation that we just heard from Kim, but also I think Dean's presentation as well. So we are really going to be discussing the approaches to conceptualize and measure digital inclusion and women's economic empowerment. So these are the 2 fundamental concepts that I think is at the heart of what this conference is all about. It's about digital inclusion and women's economic empowerment, and how do we conceptualize these, and how do we measure them? And we already have started noticing that these are quite complex concepts. There are tensions between developing context-specific measures and employing standardized tools that allow for cross-context benchmarking. So I think these tensions, I think, have already been, kind of raised, and I think we will delve into some of those. We will be discussing primarily two index. One is a Women's Empowerment in Agriculture Index. This is extremely well known. And a new contribution, and it's a Digital Access and Use Index. It's sort of, we'll also listen to that as well. So without further ado, I think we'll just move into the presentations, and let me introduce the presenters as they come to present. So I think the first presentation is going to be by Kalyani. She is with IFPRI. She's a research fellow in the Poverty, Gender and Inclusion Unit based in Delhi, India. And her research lies at the intersection of agriculture, gender, social protection, and public health and nutrition, with a specific focus on South Asia and Africa. She's going to be speaking about measuring the unmeasurable, matrix to capture women's empowerment. Kalyani, over to you.
Thank you so much. I hope you can hear me, and can you just raise your hand? Who should I be? Okay, great. So thanks a lot for the invitation. I'm really excited to be here. It's my first time in West Africa, first time in Ghana, so really looking forward to this. And what I'll be presenting is on the behalf of many colleagues at IFPRI, which is the International Food Policy Research Institute, who are working on gender and on particularly on developing metrics to capture women's empowerment. Next slide, please. So I was really happy to hear that in every session today, we've talked broadly about the reach, benefit, empower framework. And so it's nice to see that already at this point, this is quite embedded in the way people think about this. But when we started the work at IFPRI of developing women's empowerment metrics, there were a lot of measures of reach and benefit. So if you're a programmatic intervention, reach, an example of a metric for reach would be the number of women who have received trainings or who have received agricultural extension. An example of benefit would be the number of women whose incomes have increased. But as we've discussed already several times today, neither of those gets you all the way to empowerment. So with the increased income, are women able to take more decisions? Do they have more control over the income, or is that being expropriated by the men, and so on? And now the reach, benefit, empowered framework has actually been extended to include transform. And the transform component actually goes even beyond the level of the household to talk about shaping and changing social norms in the community. And so when we started this work, there was a lack of metrics to measure that empowerment component, which we really felt was central to be able to say, are agricultural development programs actually able to empower women? Next slide. So the importance of metrics, metrics really matter when they're able to motivate, monitor, and shape policy, and in particular when they're able to give information to policymakers about what is working and what isn't working. So the metrics have a real tangible instrumental role to play in developing policies. Importantly, the elevation of women's empowerment to a standalone SDG goal has meant that we now very explicitly care not about women's empowerment because of its instrumental value, because it changes health or nutrition or children's education, but that we really value the intrinsic value of empowerment itself. And so it is elevated to a standalone SDG, but we also know that it underpins 12 of the 17 SDGs. So it's really central to everything that we do. Next slide. So then the question we ask is, do we really need specific metrics to measure women's empowerment? And for many, many years before IFPRI began this work, we were using a lot of proxies for this: age at marriage, assets brought to the marriage, women's education, wealth status, and so on. But the short answer is yes, because we know that women's empowerment is complex, it's multidimensional, and so when we use unidimensional proxies, they're only getting us part of the way there to be able to measure this kind of multifaceted concept. It's also important for projects that are implementing different kinds of interventions on the ground. And as I'll talk about the kinds of metrics that IFPRI has developed, you'll see that projects are able to kind of pick metrics off the shelf that suit their needs and that have been developed with projects like them. So they're very sort of conceptually grounded. And lastly, we all know that one of the ways to kind of influence or drive policy is to put hard numbers behind it, even though we also recognize strongly the value of qualitative work. And so it's important to have metrics to be able to measure these targets, because that's helpful in convincing policymakers who like to have hard numbers behind policy decisions. Next slide. So one of the things that we've been working on recently, and this is a paper that came out this year, is to just look at commonly used proxies of women's empowerment or unidimensional measures that get at one aspect of women's empowerment. And so in a paper that, that has come out in Social Indicators Research, we've looked at data from the Feed the Future Women's Empowerment in Agriculture surveys. And we've compared that with the large nationally representative DHS surveys. And what we show is that even despite efforts at harmonizing the samples, harmonizing the kinds of households women come from, harmonizing the way the measures were constructed, if you look at just a simple metric like decision making, which is a commonly used metric of women's empowerment, these can vary dramatically across countries, across surveys within the same country. And so you'll see Ghana is on the top left. And so comparing the Feed the Future surveys to the DHS surveys, you have really widely differing measures of women's empowerment. Next slide. And so what this brings us to is kind of a common way of measuring women's empowerment, and a way that is grounded in feminist theories, but also in mixed methods research. So it gets at that concept of having a standardized index, but one that is contextually adapted in the way that it's administered, in the way that it's worded. And so this is the Women's Empowerment in Agriculture Index that was developed now more than a decade ago by IFPRI in collaboration with USAID and the Oxford Policy and Human Development Initiative, OFI. And some of the really nice features of this draw on the multidimensional poverty index that preceded it. So it's additive and decomposable. So you can get a top headline number for the sample you're dealing with. You can also then break that headline number down into the components so you can see what's really driving disempowerment. But also interestingly, it draws on data from women and men in the same household. Because one of the key components of empowerment and measuring empowerment is that it is a relative concept. And so one part of the Women's Empowerment in Agriculture Index is what is known as a gender parity index that compares scores along 5 key domains for women and men in the same households. And the domains are production, resources, income, leadership, and time. Next slide, please. So since its development in 2012 and its validation and refinement with several projects in the Feed the Future surveys, the WEA has traveled widely. So this is the latest graph of all the countries where some version of the WEA has been piloted. I will make the caveat that if a country is shaded, it doesn't mean, of course, that this was implemented in a nationally representative survey, but that we have tested these in these contexts, and those tools and the translations and contextual adaptations are available. Next slide. So in addition to traveling widely, the WEA has also spawned a large number of offspring. So we started with the full Women's Empowerment in Agriculture Index. We moved to an index that was shorter to administer and hence more nimble in the survey context. And then we developed an index, which I'll talk about in more detail, called the Project Level Women's Empowerment in Agriculture Index, which had a whole bunch of optional add-on modules that, like I said, a project implementing, say, a livestock intervention or a market inclusion intervention could pull these metrics off the shelf and use them as needed. And then finally, where we've ended up now is for the women's metric, which is women's empowerment metrics for national statistical systems. And so think something like the DHS and embedding a short module into that. Next slide, please. So I'll talk quickly about 2 of the WEA offspring, and I'm happy to take questions about the others as well. Next. So the first of these is the Project Level Women's Empowerment in Agricultural Index, or the PRO-WEA, as it's called. And this was developed under phase 2 of the Gender, Agriculture and Assets Program, or the GAP project, which had 13 agricultural development projects in South Asia and Africa, which participated in kind of this metrics development exercise. And so what that meant was there were these initial formative discussions with projects where they talked about what kinds of metrics were important for them to be able to track progress over time. Those metrics were then created, tested in the field, validated, and refined. And what we ended up with is this ProWea that you see on the right-hand side here, which has 3 broad domains of intrinsic agency, instrumental agency, and collective agency, with 10 equally weighted indicators that were developed keeping these projects at the forefront. Importantly, since we've talked about qualitative and quantitative research, the ProWea comes with qual and quant protocols. And so part of the contextualization of these metrics is implementing the qualitative protocols to, for example, understand what do people actually mean by the term empowerment. Next slide. So the advantages of the project level WEA, it has the same level of granularity as the overall WEA, but a slightly different lens. But the optional add-on modules and kind of the off-the-shelf aspect of it means that there's a great deal of user flexibility. So there's a core set of modules that allow for comparability across projects, but then you can also pick and choose modules depending on the project that you're implementing or that you're evaluating. Importantly, like I said, these were developed with the projects, and so they're collaboratively and contextually grounded in metrics that really matter to implementers. Next slide. One of the great advantages of the ProWea metrics is that they allow for inter-project comparisons. So what I'm showing here is on the left-hand side, we have the GAP2 projects. So these were the agricultural development projects that helped develop the ProWea and its indicators. On the right-hand side, we have another portfolio of 4 projects that comes under the Joint Program for Rural Women's Economic Empowerment, or JPRV. And here we have summary indicators of the impacts of the interventions that were conducted within the constituting agricultural development programs, and what those impacts have, what we see as impacts on women's empowerment status, empowerment scores, men's empowerment status, and so on. And so I won't go into the details because there are 2 papers underlying this which really talk about the interventions being developed. But what you can see this allows us to do is we're using the same metric for both portfolios of projects. For example, we can see that under the GAP2 agricultural development projects, a lot of the programs had null impacts on women's empowerment status, whereas under JPRV, a lot of the programs had really positive impacts on women's empowerment status. And that allows you to then delve deeper to say what were the kinds of project strategies or project platforms that were used in the 2 different projects that might have made the gender transformation more intentional. Next slide. The next sort of offspring of the WEA that I want to talk about is women's, which is the Women's Empowerment Metric for National Statistical Systems. And this was envisioned as a short version of the Women's Empowerment Metric that could be embedded as is into nationally representative surveys, so like the DHS, for example. So it is a survey-based direct measure. Compared to the WEA, which takes about 45 minutes, this one is short. It takes between 13 to 20 minutes, on average 15. It continues to be aligned with the SDGs, and similar to the WEA, it's counting-based and decomposable, so it can be added up and then broken down. So you can really diagnose which are the portions where the women's empowerment indicators need more work or more attention. Next slide. So similar to the ProWea, this also has multiple domains and various indicators within those domains. So intrinsic agency, or what is known as power within, so this talks about self-efficacy, attitudes towards women's freedom in livelihood choices, and so on. Instrumental agency, which is probably the form of agency that we're most familiar with, and this talks about time allocation, your decision-making over spending, and how much influence you have there. Collective agency, because a lot of programs now in South Asia and in Africa are increasingly using women's groups. These could be microfinance groups or other kinds of groups. So here we develop a little bit more about what does participation in a group organization or a collective organization mean for empowerment. And then lastly, the addition is on agency-enabling resources. So here would be things like the use of information and communication technologies, the use of financial services and digital financial services, which is the focus of this program, and also secure property rights. Next slide. Okay, so this is my last slide. So just to talk about what's coming up next. So over the decade where IFPRI began this work, it really started from the principle that if you can't measure it, you can't manage it. And by managing it, we mean being able to track it, monitor progress towards it, identify which project strategies really work to improve empowerment and which don't. And so now we've reached a point where we are able to measure at least some aspects of women's empowerment. So we would encourage projects in this room, if you have an upcoming project that where it looks like the ProVEA might be useful, we would encourage you to use it. There is a VEA help desk, which is always available for any questions you have, but we also have a website where you can download questionnaires, CAPI programs, do files, everything that you would need to be able to implement this. It's also important for us to embed the women's data in large national statistical efforts in order to be able to talk about scaling and impact. And so now IFPRI is working closely with country-level national statistical agencies to really embed that short questionnaire into survey efforts that they're conducting, so we can say something about country-level measures. And then finally, we have a large number of emerging issues. These issues will continue to morph and change as we go ahead. So climate change, for example, is a big emerging issue, and women's role in decision-making within that. Collective action, like I said, there's more and more focus on groups and collective organizations, and digital financial tools. So these are constant areas of innovation. I just want to say that the door is open. You know, we are no longer holding on to the mantle of creating these empowerment indicators. Please go ahead and develop indicators that work for your projects. We'd love to hear your feedback, and we'd love to hear how these metrics work for you. So a shout out to our funders who generously supported this work over the last decade or more. I'll just point you to the information at the bottom. So if you want more information on these indicators, there is a website where you can use a guide to decide which indicator works best for you. All of the supporting information, questionnaires, and everything is available there. And for those of you who are interested in taking a learning course, there's a self-paced, self-guided distance learning course on the ProVEA, which is also freely available and is now available in multiple languages as well. So we'd encourage you to use these and to reach out with us with any questions. Thank you.
Thanks. Thanks a lot, Kalyani. So we have about 10 minutes allocated for any Q&A. So maybe we'll take 2 or at best 3 questions so that Kalyani has some time to respond to them. So the floor is open if you have any questions. There's one there. Anybody else? 2. Okay, please.
An example is the USAID. They were running similar projects called the Ring 2, Resilience in Northern Ghana System Strengthening, which was to empower women through nutrition and livestock. But unfortunately, the stop work order from the US government halted the project. So sustainability is an issue. Other colleagues here, CSOs here, can testify to that. So my question is, how do you sustain your project in South Asia? Thank you.
Thank you. Sir.
All right. Thank you very much. My name is John from University of Cape Coast, and thanks for the presentation, very insightful, but the practitioners permits me to shift a little bit to theory. So whatever I'm going to ask may not make sense to you, but thanks, you will appreciate it. I have a little bit of concerns. How is this metrics taking care of the nuances? I remember from the afternoon's the first lecture from Dean, right? How complex it is to actually appreciate true empowerment, right? And again, it also appears to me that part of the conceptualization and the theoretical underpinning of framework is still lends itself to the liberal feminist position, which you and I know that it changes nothing at best to take us to access, and we'll be doing access, which is very basic when it comes to empowerment. When are we going to get to the conscientization a higher level of empowerment. So it becomes a little bit messy, right? We'll be using agency, but it appears the conceptualization is different. So there's the need to situate this again into the radical feminist theoretical position, who are the true owners of empowerment, and not as we have it from the liberal tradition. We'll be talking about access,
Great,
which
thank
is
you.
changing nothing.
Thank you. Any other question? Okay, we'll take those two. Kalyani, I think those are clear. One on sustainability and one on, are we getting trapped in terms of, on the asset side and at a very liberal feminist framework rather than a more radical one. Thank you.
Great, thanks. Is this working? Can you hear me? Okay, excellent. So thanks, Abu. I think it's a really important question, particularly in the financial climate that we're in right now. I will just say that the ProVea metrics can be used in any project. So the metrics themselves are not intrinsically sustainable, but they can be used. They were developed in the context of USAID projects, but they've been used now by more than 60 projects more than 200 projects in 60 countries, and those are ranging from small projects which are funded by grants such as the grants given here to government supported projects. So the spectrum is wide. The metric is just a tool to be able to measure women's empowerment within those contexts. So, really grateful to the funding that came from USA to help develop and refine those metrics. So that was the initial pilot phase. And without that support, I think this effort would have died in the water. And so we're fully acknowledging that, but now the metrics are there for anyone to use. So if you're implementing a small project in your country, in a small geographical region, those metrics are available for you to take off the shelf and translate and use. So in that sense, it is designed to be fully open access and public use. And hopefully that will help in encouraging the sustainability. To John's question, yeah, excellent question. In order to capture the nuances, I think I'll point you to the paper that talks about the development of the indices, but there was a lot of work that went into sort of interplay of qualitative and quantitative methods. And so there was formative qualitative methods. For example, just the definition of the word empowerment and what defines whether a woman is empowered or not. In Bangladesh, it might be a woman who listens to what the men in her community say, which is a very different concept of empowerment than what we might assume. And so just being able to contextualize, even use the words that are understandable by respondents. There was a process of cognitive interviewing, and there are several papers that are available on that. So when you ask a question, is your respondent understanding what it is that you're asking? So a lot of work went into kind of capturing the nuances. And even now, if you're implementing the ProVea, we recommend that you do a combination of qualitative and quantitative work. And then in terms of moving beyond assets, maybe that wasn't fully clear in the presentation, but we fully support the movement beyond assets, which is why we have those 3 different domains. So the instrumental domain is a domain we're most familiar with. So that is resource control, control over income, time agency, and so on. But there is that intrinsic domain, which is the power within. So things around autonomy in income decisions, self-efficacy, other aspects of empowerment that are not around assets and control over resources. And then, of course, the collective domain as well. So I agree that there's more that can be done, and we do need to move beyond that asset focus. But I hope that we're getting at least part of the way there. Thank you.
Okay, we'll move to the next presentation. Let's give a round of applause. Okay, so the next presentation, I think, is online. Is everything ready online? Okay, so it's a presentation by Amnesty Lefebvre. She is going to be presenting. She's associate professor at the School of Public Health and Family Medicine in the University of Cape Town. Her work explores the cost, differential reach, and impact of digital innovations on development and health outcomes. And it's the title is Optimizing Measurement of Women's Access to and Use of Technology in Mobile First Population. So over to you, Amnesty, for the presentation. Thank you.
And thanks so much for that lovely introduction. I want to note that I'm joined by my colleague Mayak Date, who works with our team from also including Johns Hopkins University. So the two of us will be speaking for the next 10 or so minutes. So thank you very much for indulging us. So Mayak and I are pleased to be here today to speak on behalf of our larger consortium from the University of Cape Town, Johns Hopkins School of Public Health, and our colleagues in India from Oxford Policy Management and the GXD Hub. As Emran kindly mentioned, the focus of our talk will be on a digital access and use index, which our team has been working to develop as a way of reconceptualizing how we measure the digital gender gap to extend beyond traditional parameters of phone ownership and internet use. And this work is being conducted as part of two separate investments from the Gates Foundation, which endeavor to harmonize measurement of digital access and use across domains of access, digital competency, safety, security, digital agency, and social and gender norms. Next slide. To improve the, Mike, really good, thanks. So to improve the measurement and metrics for assessing digital access and use at a population level, we followed the 5 steps basically depicted on this slide. We started with item generation and catalog definitions, domain survey questions that are currently used to measure key components of digital access and use. And we then had a series of expert consultation workshops and one-to-one meetings to refine items in the proposed strategy for measurement. This has fed into a process of feasibility, reliability, and validity testing, which has included sort of both secondary analyses and primary data collection. Cognitive testing, has been a big part of that effort. And to date, we've done cognitive interviews in India, Kenya, and Nigeria. In contrast to this prior presentation, which we heard, our index is at its infancy, so we haven't yet deployed across 200 countries, but hopefully at some point in the future we'll be there. But for the sake of today's conversation, Mike and I are going to be focusing on the primary data collection efforts, and in particular, the recently completed survey across the Indian state of Bihar. The data for this is serving as the foundation for the initial index creation, although we're anticipating added work to further refine the items proposed for inclusion. Next slide. In late March, our team finished the fieldwork component of a 10-district survey across the Indian state of Bihar. For those of you unfamiliar with Bihar, it's India's second most populous state and among its most disadvantaged in terms of human development indices and gender inequality indices. Just for context, about 30% of women in our sample were able to read a sentence as a proxy for literacy, if that gives you a sense of kind of where things fall. As a result of kind of its current status, Bihar is one of the Gates Foundation's priority estates, along with Uttar Pradesh. And so our survey really sought to bolster sort of how we're measuring digital access and use, and also sort of generate primary data which could be used to inform programming in that state. We had a secondary aim which sought to measure differences among women enrolled in self-help groups and those not. And of course, the quantitative survey was followed by post-survey qualitative research in a subset of 2 districts. So for today's presentation, we're going to just give you a snapshot of where we are in terms of developing an index drawing from that quantitative indices. Next slide. The quantitative survey itself included nearly an hour of questions across the domains of digital, comprised of domains related to connectivity, physical access, and affordability. And we've included illustrative items here that were captured in that. The survey included in a larger expansive list, but this gives you a snapshot. We additionally measured digital competency, including over 65 different skills. A subset of 31 of these skills map back to DigComp's 5 competency domains. As part of the digital skills assessment, we also explored the reliability of reported versus observed digital skills and the reported ability to perform skills alone or with assistance. In terms of safety and security, we included a limited set of items in the quantitative survey in Bihar But we have a broader bank of questions related particularly to harms that could be used in other settings. And then next, you'll note domains on social and gender norms, including descriptive and injunctive norms and attitudes related to phone use, internet use, phone ownership, and the use of phones for financial transactions. Finally, digital agency was included based on responses to questions on decision-making, permissions, restrictions, and constraints. Not depicted here on the slide, but measured in the survey are a range of other outcome measures on women's economic empowerment and the use of phones for high impact use cases, including agriculture, health, education, and other forms of economic generating activities. Next slide. So the index was derived from a cumulative score that is assigned to respondents based on reported values across domains. We've proposed two methods for deriving it. The first, and the one we've used to date, is a data-driven approach where we look at patterns and associations through a statistical lens. The second is an approach where we'll engage experts in the field using a Delphi process and aim to reach consensus on a refined set of items and relative weights for those items. You'll see in the slides to come that this latter approach is our next phase and likely ideal for deriving an index that is more globally applicable to a range of contexts. And for generating information useful for program design, evidence generation, and informed decision making. Next slide. So the current index is based on a 29-point scale, which gives the largest valuation to two domains. Just a note here, the current components of the index that Mike had in the last slide are, these are the items that were included from the Bihar data after dropping items with low variance or poor loading. So it's a subset of larger questions within this. Next slide. Great. So the current index is based on a 29-point scale, which gives the largest valuation to two domains, so access and digital competency. Because of time limitations, we're going to focus on these two domains predominantly in the slides to come, and give an overall picture of the performance of the score across all of these domains, and highlight some potential use cases for its use. Next slide, Mike. So as noted in kind of the prior slide, the access score includes four components: phone ownership, denoted sort of by A here, phone type, B, phone condition, and the periodicity of access. So that includes, times during the day that you had it. And for all of these, we tested alternative ways of phrasing these questions quantitatively. And then, of course, this work was born out of an extensive qualitative phase. But for the sake of what's included in this access score, it's a multiplier of phone ownership times phone type. And then, it adds in the condition of the phone, a score for the condition of the phone and the periodicity of access, giving obviously a greater weight to different components within this. So two things that the slide tells us. One is that, the score is derived as this multiplier of A times B plus C plus D. And then second, we see the individual distribution of responses based on the data from Bihar. And here the pink denotes women's responses and the blue men's. And so what we're seeing from this is not surprising, perhaps. We see that a higher proportion of men, if we look at that first sort of bar in terms of the phone ownership, we see that a higher proportion of men at 84% versus 54% of women own their own phone. If we look at phone type, we see that, not surprisingly, men have better sort of quality of phone in terms of higher smartphone ownership. They have more functional devices in terms of sort of the condition of the phone, and that was assessed through three different subparameters of whether the phone could hold the charge, how the quality of the screen, whether it was cracked so severely that you couldn't decipher text on the slide and on the screen, and then of course the functionality of the keypad. So ultimately what we see from this again is there continues to be a gender gap in overall sort of access and the quality of access between men and women. And, the score ultimately considers, the sort of multiplier in addition of this item to generate that access score. Next slide. The last domain that we wanted to deep dive in is digital competency. And in particular, we've done a definition of competency that focuses on digital skills score component. And we originally sought to survive this based on the IT digital skills indicator, which includes 31 questions from our larger subset of 65 different skills. However, we realized that 31 questions for most programs is infeasible to measure. So we sought to streamline this down to a core set of essential skills, which presently sits at around 15. And these are depicted here on the slide. These are assessed based on self-reporting. And here what we see from the data in Bihar, again, with women in pink and men in blue, is perhaps unsurprising. Men have double the digital skills score as women, and and a higher proportion are able to perform not only sort of basic skills such as making an outbound call, but more complex skills needed to support high impact use cases like searching the internet or making financial transactions. So with a snapshot of kind of these two domains of access and skills in mind, I want to hand it over to Mayak, who's going to discuss the broader performance of the full range of factors in the index and give a few examples of how we might use it. Mayak, over to you. You're on mute, Mayak.
My apologies. Is this better? Yeah. Okay, so the distribution of the digital access and use scores shows a bimodal distribution. So as you can see in this graph, the x-axis over here is the distribution of the scores from 0 to 29. It's a 29-point scale. And we see that there are two distinct groups that emerge amongst men and women. So one group is at the lower end, where we see that men and women show similar patterns in the distribution, but there is a distinct gender gap that emerges amongst people in the higher DAC scores, which shows that the men have a higher use and access score compared to the women. So if we stratify the scores further by the type of phone that people have access to, the distribution of men is similar for feature and basic phone users, but we see a gap emerging amongst smartphone owners. This is partly a function of the way the score was created, of course, since the phone type also contributes to the score. But we'll talk about separating that in a second. But first, as a validation check, the DAU score is able to discriminate well and as expected between different groups of age, education, and literacy. So we see that higher, people with higher education tend to have higher scores, which is what we would expect. Now, coming to how we use this index, currently what we've demonstrated is using the index as a continuous variable to identify patterns of access and use amongst any population. We can separate out the access and use components, which yield some interesting insights, like how removing physical access barriers alone is not enough, which we'll talk about in a moment. And the score can also be used as a measure for outcomes. Going forward, implementing this index in future studies would likely reveal interesting comparisons over time, geographies and populations, and those results would likely inform program decisions, design, resource allocations, and advocacy. So the DAU index is created by grouping the populations into three levels based on the scores. So we have the low, medium, and high bin for each of these individuals. And this is useful to explore the profile of a target population. So in this case, we wanted to see who are the respondents in Bihar that fall into the highest level of digital access and use. And what we see is these are usually individuals under the age of 40 who are literate and in a higher SES strata, and who own smartphones. So on the topic of smartphones, we decided to break out digital access and digital use. So here, instead of a 29-point scale, we are exploring only the 18-point component, which is composed of skill, safety, and the agency scores. So the distribution that we're looking at here is for smartphone owners. So these are the people who have the highest level of access, that is, they report ownership of their own phone, and the phone that they have is a smartphone. So theoretically, they cannot get any better access to technology than this. But we still observe that there is that same distinct gender gap where men tend to have higher level of skills and agency. And what this tells us is that it's not enough to give women access to smartphones, but that there is an underlying systemic factor that governs how that phone is used and the level of skill they develop from it. So coming to outcome measures, how the score corresponds to certain use cases that we measured in our survey in this graph. The blue lines show the men's prevalences and the pink lines show women's prevalences. And the dots on the lines are for each level of the index. So we see the expected trends where people with higher levels of access show higher use prevalence in most cases. Notably, the largest gender gaps were seen in economic related use cases, which includes online transactions, use of mobile banking, mobile money, as well as use for government and agricultural uses. So the index can be used as a covariate in regression analyses. One example that we presented here is looking at a logistic regression to identify determinants of women having a savings account in Bihar. Now, these are not prevalences. These are predicted probabilities based on the logistic regression. So what we're looking at is the digital access as a covariate for the digital access index, which shows that someone falling in a higher category has a 56% predicted probability of having a savings account when controlling for all of the variables. So this outcome shows that having a higher access and use of technology correlates with higher odds of a woman having a savings account. So that's how the index can be used as a covariate. And yeah, back to you, Amnesty.
Thank you so much, Mike. So just to kind of summarize this, I know we're at time. What we've seen kind of from this first effort at creating a broader digital access and use index is that its current composition discriminates well and as expected across demographic and access groups. A key finding from this data is it tells us that giving access to kind of smartphones, as Kim and others have suggested before, alone is not sufficient to close a sort of gender gap, particularly in skills and agency. Currently, we have 29 questions in the index, but the goal from, at least from the Gates Foundation side, is to get this down to around 10. So you could see, sort of, we're going to have to undertake a sort of follow-up processes, and the intent is to do that through sort of a Delphi approach, as well as in-person consultations, to sort of get consensus on what that final kind of, 10 or so questions should look like. So we look forward to your comments and thank you for your time today. Back to you.
Some questions? The floor is open. I can see 1, 2. And anyone else? Okay, please.
Thank you very much. A very interesting study. I have 2 quick questions. One, I realize you sampled more women than men, but you didn't explain why. Why did you do so? Then 2, I tend to have a problem with access when you define access also as sharing, because the two, if I own a phone and if I'm sharing, the outcomes are different. So were you able to disentangle or separate the two in your analysis to see whether they gave different outcomes? Okay.
Was the question audible?
Yes, thank you so much. So I'll just sort of briefly take a stab, and Maya can also jump in. So to the first, sort of question on sampling. So we sampled basically one of the objectives that I highlighted was to sample women that are part of these economic empowerment groups called self-help groups. So our sampling, sort of did try to accommodate, sort of self-help group. So, for that reason, our sample of women is slightly larger, but we are powered at a population level to look at differences, across men and women overall. The other reason why the population for men is slightly lower is that, our interviews were conducted during the day, and so we were sort of dependent upon a man being in the household at the time of the interview. The other sort of related to that is that this is a context where there is some degree of outward migration out of the state for employment. So I don't know, Mike may know offhand what proportion of men in that sort of category were not physically in the state for those reasons. But yeah, so that explains some of the gender differences in the total sample size, which I think at the end for men was around just over 5,000, and for women 7,000 and change, I think. In terms of the second question on phone sharing and versus phone ownership, it's interesting you said this. We've done quite a lot of work, sort of trying to understand conceptualizations of what is a phone owner and how that's defined across different surveys. I would say in the Indian context, and there are contexts elsewhere in South Asia where this is relevant. The concept, there is quite a high prevalence of phone sharing, and so we can restrict the sample to only focus on a score generated based on ownership. But for the Indian context, there is this nuance where a lot of women do have a lower grade sort of quote unquote access, where it's not they don't own, but they may have access to a phone that they share with their husband for certain segments of the day. Mike, do you want to add to anything that I've said?
Only that, yeah, we have done extensive work, especially in the Indian context. There's also a concept of what we explored as prime ownership. It's not included in this index, but what we basically disentangled here was for some people, even if they owned the phone or they reported ownership of the phone, they were not the main users of the phone. So, for example, a woman might say, "Oh, yes, it's my phone, but my son uses it most of the time." So there are those nuances that we also have data on, and that we're still exploring. Yeah.
And I think we really struggled with trying to limit it down to certain numbers of questions. And so I think just on my point on prime use amongst phone owners, we dropped down about 6%, in terms of the proportion of phone owners that are not the prime user. So even amongst that category of a quote, self-identified owner of a phone, they may not be the prime user. So you have these gradients where it's going to be imperfect to try and capture it, and we can layer in more questions to get a more nuanced definition. But a lot of surveys can't accommodate that. So happy to discuss additionally.
Partly, Michael tried to address some of part of my question about the nuances, still on the nuances. And I must say that it's very insightful to have such a metrics and all of that. But I think going forward, it should be a little bit more robust and complicated, right? Because I was asking myself, okay, so what does it mean to be a single person, a younger person, and a richer person, and what would that mean for access? So I'm bringing in the whole idea of intersectionality. So it's not enough to just hold the other demographics constant and run the model and say that our age is in the regression model is significant, and it's not enough. We want to see how, for instance, age is intersecting with the income status of the person. So how would access affect, for instance, somebody who is richer and younger? You see, the dynamics will change. So it's just a suggestion in playing with the model, a way to make it more nuanced. I'm suggesting you apply the lens of intersectionality and not hold the demographics variables constant and be running to find which one is significant, but rather see how they intersect with each other to bring about other nuances and experiences in terms of the access to phones.
Okay, thank you. Thank you. Let's see if there's any other question. Otherwise, we'll ask for a response. Anyone else? Okay, if then I will maybe ask a question about, I mean, this has been, you have developed this in the context of Bihar. So I was just wondering, what type of adaptations you think would be needed if we were to generalize this or use this in other contexts. So that would be a question from my side. Please.
Just on, to the first gentleman's point, I think, Mike, if you can go down to the slide on the first one on use on the score, it has, so we, sorry, I think it's like 16. No, go up. 15, sorry, go to 15. So I agree, you know, it's important to sort of consider intersectionality across other sociodemographic characteristics. You know, there's lots of ways of sort of presenting, you know, either a score or an index. This is sort of just a snapshot of how you could look at a very, you know, some of these factors that might sort of help us identify sort of, you know, which particular groups have differentials in that score. You know, to the first gentleman's point, there's lots of different ways to do this, and we have the data on it as well to come up with a sort of more comprehensive assessment depending upon the outcome that's of interest of, you know, kind of using a range of demographic characteristics plus the, you know, in the index within that, and then sort of regressing that onto different outcomes of interest. To the second point on, you know, sort of context specific adaptations, I think where we're headed is in a similar, hopefully, is in a similar direction that the prior presenter, you know, sort of also sort of articulated, which is that there will be a set of guidance to support context specific adaptations. We've gone through sort of a very robust process in terms of, you know, getting the question phrasing, quote unquote, right, at least for Hausa language in Nigeria, Kiswahili in Kenya, and in Hindi in India, and currently are quite confident that the index that we have would work well, at least in terms of comprehension of questions across those you know, kind of 4 settings. In terms of the components of the score, I think our next phase of just sort of making sure that the items speak to a broad range of contexts will have to sort of be revisited through these sort of series of expert consultations that are planned. And, you know, much in the same way that the prior speaker articulated kind of a 10-year process, you know, I think we're in the infancy of that journey. And I think in terms of technology use, things are changing quite rapidly. So it's always a challenge to try and sort of match where the moment is, with also having kind of stretch goals. So Mike, if you go to the digital skills slide just for a second, I think, you know, part of the big, you know, sort of challenge we're trying to sort of face is how do you ready this index for something that is longitudinally sound, given the pace at which technology is changing. If we sort of can conceptualize a place where the physical access to device barrier may be limited, as, you know, sort of the cost of smartphones decreases, as sort of, you know, more and more individuals are able to sort of get their own phones and the quality of those phones increases, you know, we anticipate that current components of the use will, you know, play a stronger role in this. And one of the challenges we have, specifically given its current weighting within the index, is getting the right mix of digital skills that are sort of relevant to a range of populations, particularly mobile first low income country settings. So here as an example is a snapshot of 15 skills. You know, the ITU has 31 questions that we've helped phrase for them and have gone through sort of an expert consultation process. But, you know, again, already we're at 15 questions. So sort of trying to capture even the full range of their indicator is likely infeasible, at least for most of the Gates Foundation's grantees. So it's always a sort of trade-off of trying to have a score that can be widely used with one that can meet the divergent needs of varied contexts. So ultimately what we'll end up having is a longer indices and a longer bank of questions that individuals can draw from, as well as sort of a minimum core set of questions that probably number between 10 and 15. And that process again will be born out of, you know, a further refinement process that we're undertaking presently. Happy to answer additional questions and also have thoughts and guidance if people have suggestions. Over.
So we have had 2 very interesting and promising, you know, presentations on indicators. The women's, you know, we and then this one, which is on digital access and use. The next presentation is actually, you know, slightly different. I mean, it's experimental study. It's so I would like to invite Scott Graham, from Finca International. So Scott leads the research and data science team at Finca International. It's a global nonprofit that is fighting to end poverty through inclusive finance. And the title of the presentation is Adapting and Validating We Indicators in an Experimental Study of Savings. So in many ways, it's an application of, some of the previous two presentations we basically saw. So let's listen to the presentation. Over to you.
Thank you very much. Quick mic check. Is this on? Yes? Good, thanks. Quick question. How many of you consider yourselves either actual or aspiring data nerds? Quick show of hands. Okay, very small number. This is going to be interesting. Yeah. Aspiring, that's why I added aspiring. I'm an aspiring data nerd myself, so I can relate. So a few years ago, Finca published the results of an experimental study in Uganda. And in our study, sorry, you can go forward one slide. Thanks, just that one there. So in our study, we were testing whether simple financial coaching delivered through phone and text messages could improve the use of savings accounts in Uganda. And among our findings, we were happy to see that, as hoped, coaching did in fact increase savings account activity, including the use of banking agents. And even though this was not a gender-focused study, we also found that some of the most robust effects were observed among women, with nearly a doubling of account transactions with even one coaching call. So we followed this up with some deep qualitative conversations with women so that we could understand what were all of the factors that influenced their savings activities and what did the end result of that mean in their lives. And these conversations drew our attention very strongly towards the challenge of empirically measuring women's empowerment. And so with the support of BRAC, we did a follow-on study. And the follow-on study, which I'm going to discuss today, is quite different. It is not actually an experimental study. Our goal was to adapt a set of WE indicators to the specific context of women's savings in Uganda. Every word of that is important. And then to statistically validate those indicators, the indicators themselves, through their correlation with actual savings behavior. In other words, we were trying to find, out of all of the possible WE indicators, what are the ones that actually had some kind of empirical relationship with observable savings behavior. So in the aforementioned qualitative phase, and you can go forward just one click, thanks, stop there. We adapted our battery of WE indicators through a series of focus group discussions and cognitive interviews. So the WE constructs that we started off with are all ones that you would be very familiar with in the literature, such as household decision-making, gender norms, access to digital services, financial literacy, et cetera, et cetera. But our task in the first stage of our study was to express those indicators in terms that were meaningful to the women in our study. And the end result of that was a set of 80 WE questions that had been adapted to the context of our study. Next slide, please. So here are some quick insights and examples from that content validation stage, which is the first stage of our study. So first, we observed that many general WE constructs needed to be detailed out to a much greater degree in order to be meaningful for women in the context of their savings activities. So for example, when we asked them whether their husband or spouse was restricting their social activities in any way, they were very quick to point out that there were other family members besides the spouse who could be just as problematic, citing in-laws and other members of the extended family. So these kind of adaptations, pretty, we expected them, they're normal. But there were also two takeaways that really challenged our thinking and that had a big influence in the way that we structured our validation exercise. The first one, and I think this has already been mentioned a couple times this morning, was that almost all of our women's empowerment features, they were positive in some contexts and negative in other contexts. Even something like decision-making power had negative connotations if it came with additional financial responsibilities. Or privacy, which we might, logically assume is a positive feature. In some instances, it had connotations of secrecy, lack of trust, etc. So we came to think of this as bipolarity, right? Meaning that all of the we features were positive for women in some circumstances, but negative in others. Another insight we had was that in addition to being bipolar, there was a real issue of bidirectionality, meaning that in many cases, the women's empowerment condition would determine the savings outcome, and in other cases, the savings outcome would influence the women's empowerment condition, right? There was no clear direction of causality. It was really bidirectional. So we say that women's empowerment and savings were very entangled. Now, these are very easy to intuit. I don't think anybody's shocked by these particular insights, and they're very well suited to exploration in a qualitative study. But we were trying to do a quantitative statistical validation of the indicators themselves. So it was a big challenge for us to figure out how we could encompass both the bipolarity and the bidirectionality in our statistical validation model. And I'm going to talk about how we did that. So if you can go forward. Yeah, so here are some of the basic elements of our study. So with BRAC support, we recruited 1,500 women into a goal-based savings account in Uganda. 50% of them were also exposed to a financial coaching regimen by phone. Now, I have to pause and say, we were not trying to test the efficacy of financial coaching for women's savings or empowerment. We were testing the hypothesis that coaching, which we had already observed in our previous study, had disproportionate effects on women. We wanted to see if coaching also enhanced the observable relationship between women's empowerment and savings. It's a nuance, but it's one important because we're not trying to prove whether coaching is effective. We're trying to prove whether it changes or in some way enhances the relationship between the empowerment indicators and the savings outcomes. So we incorporated our 80 content validation features into our WE survey, and we analyzed those results together with data from their savings accounts over the course of about a year. Now, one very important aspect of our study is how we handled the data, keeping in mind that we didn't want to assume any kind of causality, and we didn't want to impose any values. And so one way that we achieved that neutrality is that for every one of the answer options in our survey, we converted them into binary variables. So, for example, if we asked a woman if she felt comfortable expressing her opinion in public, there were 3 possible answers: not comfortable at all, somewhat comfortable, very comfortable. We didn't assign those values 1, 2, and 3. Each one of them was treated separately as a binary variable with a possible value of either 0 or 1. Okay, this means that all of our we features were able to live independently without us imposing any kind of value on which one was better than another. But what the effect of that is that it took our 80 questions and expanded it into a set of 375 independent we features that we're going to go into our validation model. Now, we removed all of the ones that had low levels of variance, and so that brought us down to about 230 we features that we were actually putting into our statistical models. The last thing I'll mention is just the machine learning algorithms that we used. So we used 4 simultaneous methods, one lasso stability, 2 versions of random forest, and Baruta. I'm not going to go into those at the moment, but just to say that there were 4 simultaneous models running across, and then for each savings outcome, we picked the one that performed the best. Okay, so let's go forward. And here's a quick double click on what we mean by validating the indicators. So we were trying to identify which of our 238 WE features were actually statistically correlated with observable savings outcomes. Okay, so what are those savings outcomes that we're comparing them against? So we adopted a model of savings that we think reflects financial agency. We borrowed it from other researchers that broke it down into 3 distinct outcomes. The first one was the ability to set a meaningful savings goal. So when a woman joined our study and said she was trying to save such and such amount, a year later we tried to find out, is that amount still relevant? Is that still an important goal for you? The second was their actual ability to save towards that goal, which we observed through their savings account activities. Did they actually make concrete progress towards their goal? And then the third savings outcome was the ability to use those savings purposefully. Okay, everybody with me so far? Okay, so we can move on. All right, so here's a picture of the workflow that we used for selecting and validating our WE features. Now this is a pretty standard machine learning workflow. I'm not going to dwell on it too much. I'll just point out a couple of key features. So our sample we divided into 2 groups. We had our control sample and our treatment sample, treatment being the ones that received coaching. We set them aside, and then we did all of our statistical modeling and validation on the control sample. So we took 70% of the sample to train our models, and I mentioned that we used 4, because there was the Lasso, 2 versions of random forests, and the Baruta. And then in the training data sets, each model produced a minimum level of features that predicted savings outcomes, the specific savings outcome in question, and then a maximum model. So we had 4 models producing 2 results each, so 8 altogether, which we applied across all 3 of the savings outcomes that I just spoke about. Then, once we had the feature set selected, we then validated them on the remaining 30% of our sample to see how our selected features performed against randomly selected variables. And then once we had validated them, we also compared them to see how they worked in the coaching sample. So did the features we selected actually have stronger predictive power in the coaching set than in the control set? So we can go forward here. Okay, don't shrink. This isn't as painful as it looks. So this is the output from one of the models that performed best for our first outcome, which was the ability to set a meaningful savings goal. And it happens that Lasso was the best performing model for this particular outcome. Okay, so on the far, I guess your left, all we're graphing here is the correlation values for each of the feature sets. Does everybody know what I mean when I talk about a feature set? It just means which specific variables from our WE data actually predict savings outcomes. Okay, so that's the feature set. So there's a minimum threshold in this particular model of 7 features that reached a basic level of correlation, meaning that they successfully predicted whether or not a woman could set a savings goal. But then the model improves up to 32 features. So the best performing version of this model had 32 features that predicted women's savings. But here's the interesting part of that. First of all, 32 features, that might sound like a lot. That's a lot of empowerment things, looking at control over finances, access to phones, whatever it might be. But consider that we started off with 230 variables, and only 32 of them had any real empirical power to predict whether or not a woman could set a meaningful savings goal. So that means that the vast majority of the features, which we had so lovingly and painstakingly adapted to the specific context of this study with these women talking about savings, were all noise. And anything you added after 32, after the optimum 32 features, start to degrade the performance of the model. So the more we look for, actually the worse, the higher ratio of noise to signal. So this is a flashing red sign if you care about, the empirical aspect of this, telling us that, even if you carefully adapt your indicators to a local context, there is a very high likelihood that what you're measuring is actually noise. It's not giving you a clear picture. So then on the other two panels, B and C, all we're showing is how did our optimum feature sets compare to the validation results. So in validation, every one of the models ran 1,000 times and picked 1,000 random sets, and then we compare the correlation value of each of those sets against our optimum set. So we're the dotted lines. The blue panel is our original feature set with 7. The red panel is the 32 features, and you can see that our correlation values are higher than 99% of the randomly selected. So these are pretty well validated feature sets. And I'm not going to dwell on this too much, but yes, we did find that the correlation was better when we ran it in the treatment set than in the validation set. So this tells us that coaching actually did have an observable effect on strengthening the linkage between savings and women's empowerment. So now, I know you guys are like, okay, enough of that. What was the end result of all this? So let's go ahead, one more slide. All right, so where did all of this lead us? How do we summarize this in an actionable way? So keep in mind we ran 8 models over 3 possible outcomes. So there is a total of 24 times that any individual variable could have been selected. So all we are doing here is just adding up the number of times that any given feature actually appeared in one of our selected models. And so the top performing 5, sorry, I have to move over here a little bit. The number 1 feature that was selected 21 out of 24 times was household financial responsibilities. And then there were others such as future outlook. In other words, how did the woman describe her economic prospects? The exposure to financial literacy training was a common feature, especially if that training focused on savings. And then another very recurrent construct was women's active concern and desire to take action for their old age. There's an enormous sense of vulnerability when they think about, the years when they're not able to work, and so it ends up being a very important feature in looking at how their empowerment manifests in the course of their savings. Another financial literacy feature here, the ability to compare financial products comes up. And then just sneaking into the top ranks, we have decision-making power. Now, I think what's surprising about this is that some of these do not really feature very prominently in kind of the general literature. And this is not in any way to refute that literature, but it just shows how much things can vary from place to place and how important it is to contextualize your measurements. And then at the bottom of our list, some surprises as well. So it was very rare for time control to come in as a feature. Okay, I'm almost done. And at the very bottom, the preference for digital channels versus physical locations. So yeah, just, I guess, a word to the wise, be careful. Just one last slide here, because I did promise you there would be some even more actionable insights. So even though coaching, we weren't testing the efficacy of coaching, when we saw that it did actually strengthen the statistical relationship between savings and empowerment, we did some further deep diving with other machine learning models to really figure out, well, who was impacted by coaching? And we found some interesting things here. So when it came to the savings outcome of being able to set a meaningful goal, it was actually the more vulnerable women who had a stronger impact of coaching. meaning that coaching helped them summon the wherewithal to set a goal. And these were women who had negative outlooks, who had very little family support, not much of an outlook for their old age. When it comes to actually achieving your savings goal, taking concrete steps towards it, here we saw that coaching led to actual deposits, mainly among women who were already somewhat empowered. They were already more knowledgeable, they were already less vulnerable. I guess this isn't too surprising. And then when it comes down to control over our savings, again, this is where the vulnerability measures come into view again. And we saw that the women who had no or very little financial education and had never been to a savings-related training were the ones who were most affected by coaching in terms of their ability to use the savings as they intended. Anyway, there's a whole lot more. If you'd like to, the study is now published on the BRAC website. I'd be happy to take any questions. Thanks.
Okay, thank you so much. We're not doing very well for time, so maybe we'll just take very brief questions, if there are any. Otherwise, we obviously have lunch and the rest to interact and ask questions. But let's see if there are any questions. Okay, if there's, yes, please.
Thank you very much. My question is very brief, and it has to do with the target population. What was the criteria you used in identifying those women?
Okay, great, thank you.
Yeah. You want to go for that? Sure. Yeah, so we were sampling from women that were within a certain distance of the branch of the bank so that they could have access to the account if they needed. But other than that, we didn't stratify the sample by any specific criteria. So, you know, education, income level, et cetera, none of those factors came into play in the targeting.
So if there are no other questions, I think we'll break for lunch. But I think what we have is, you know, kind of three really interesting presentations on sort of measurements and concepts, and I think it's sets us up well for the next panel, which is going to be, you know, how do we move from measurement to impact? So I think with that, I would like to conclude this session and hand over to our MC. Thank you so much. All right, so
please, we can give it to them. Those who did the presentation, please, we pick a good picture. I mean, those of you at that session. So the other presenter, the first presenter, can you please join our here?
No, not Dean.
All right. In fact, we have already spent our lunch break here, but I'll still give the 30 minutes. And so we come at 1:30. Yeah, it's already 1, so let's do, 1:40. Let's do 1:40. All right, thank you.
Okay.
She's coming. She's coming, so okay. And please, you can still be visiting the exhibition booths. And make sure you do your voting. All right, so please, those who, please, at the introduction session, hello, Madam Aku and Sir Amadou. right. Thank you. So please, we are for the first. Yeah, please, we are done with you. So the three of them. We've taken yours already. Yeah, so this is for the first. All right, thank you. His panel members. So I'll leave the rest for you. Thank you. Yeah, I'm going to. So please, I think that will be your seat. Feel free. You are going to sit and talk. Okay. Oh, but are they gone or? Well, let's receive the number.
Thank you. Thanks MC, and thanks for the introduction. But this session is not about me, it's about the amazing panelists that we have. So we have a really good mix of academics, practitioners, and policymakers. So just to introduce very quickly, we have Professor Philip Roster. He's a professor of government and at the Center of, as the director of Center of African Development at the College of William and Mary, Virginia. And he has done a lot of work around state building, conflict, and development. So very happy to have you. Please, if you could come over. Yes, take any seat. Next, we have my friend and new colleague, Kojo Egan from BRAC Ghana Savings and Loans Limited. Please have a seat. So Kojo comes with, again, diverse experience. Now he's in the financial sector, but he has done a lot of work around international development and grassroots development, multi-sectoral, financial, non-financial. So very happy to have you. Next, we have another practitioner, Priscilla Hazel. I believe we have you. Yes, there you are. She is a CEO, and you've been working as a business leader, entrepreneur, so very happy to have you as well. Please come over. And last but not least, we have a policymaker, so Ben Trosklu. Ben, yes, there you are, Ben. So he's a chief economic officer at the Ministry of Finance in Ghana and have over 15 years of experience at the ministry as an economist in various roles. So again, very happy to have you. Now that we have the panelists, I will very quickly hand over the mic to the panelists so that they can speak and I can shut down. But just to set the scene, we have seen all the complex measurement issues. Now we need the wisdom. And I'm sure we'll get out of the session with wisdom from these diverse experiences. But as my sort of cheap attempt to get some wisdom, this morning I was asking ChatGPT to give me some wisdom about measurement. And I don't know whether I got the wisdoms, but I got confused for sure. So I got these quotes. Not everything that can be measured is important. Not everything that is important can be measured. Sure. I think this is meant for Albert Einstein sometimes. But then I also got, you can't improve what you can't measure. Okay, we had to measure. But then we also got, when measure becomes a target, it ceases to be a measure. Okay, so we can take measure, but we can set it as a target. So maybe it has a boundary. And then I also got, only what is measured gets done. So if we can't measure, it won't get done. So I'm a little confused with all these four somewhat counterintuitive wisdom. So with that, maybe I'll start with Phil, from your experience as an economist, as a development thinker, and an academic. We can measure so many things, from what is the primary, like, if we take a log frame of what is our intervention output, to sort of intermediary, ultimately what is the impact, what are the knock-on impact of the impacts, et cetera, et cetera. How do you prioritize, or how do you stop what to measure?
The microphone on? Do I need to? Okay, you can hear me? Okay, Munchi, thank you so much, and thanks to WeDefine and WeConnect and IPA for hosting this panel. Very timely panel based on the discussions we've had so far today. And I think as Munchi set us up, and maybe inspired by ChatGPT, like, measurement is obviously very important, right? And we've already seen that from the studies today, measurement is important both from a learning perspective, but also from a policy perspective. Right? And so I look forward to hearing from my co-panelists to talk more about the policy implications of measurement and how that shapes what we study, how it shapes what ultimately we implement. But yeah, when we come to thinking about how maybe academics think about measurement, and we actually take this quite seriously, as we take, I guess, ourselves and many other things. But, you know, I think, like, first, when thinking about measurement, we want to, you know, what are we trying to learn, right? And what are we trying to ultimately measure is kind of the first thing that comes to mind. I think too often we start with the indicators available, right? We have easy indicators that are available. Let's use those, and then we can, you know, see if they match something of interest. But doing that is kind of planting a garden with what seeds you have rather than what you want to grow. So anyone I've talked to have already been telling them. Yesterday, I had the pleasure of going to Tete Kwarshi's cocoa farm. Right? Tete Kwarshi is a famous Ghanaian hero who was the first to bring cocoa seeds to Ghana from today Equatorial Guinea. He was working there as a blacksmith, and he saw cocoa flourishing there and thought, this could do very well in my home country. And he had a vision of what he wanted to grow, and those seeds weren't available in Ghana. They had to be brought there. And he smuggled them there, defying the colonial authorities and Fernando Po, and planted the first cocoa farm. And he probably never imagined kind of the fruits of his labor. But there you have it. But I think it's very important is we start with what do we want to measure and understand, right? Then we derive a definition, and then from there we go to the indicators, rather than vice versa. Too often we start with the indicators, and what we always try to get away with is say, oh, they're proxy indicators. When you hear proxy indicators mean they're not the best indicators, right? It's what we have available. Now, you know, like the Tete Kwarshi example, it's hard to like create your own garden, right? If those seeds aren't available, right? It requires a lot of investment, sweat equity. So and I really appreciate WeDefine, WeConnect, and other donors investing in measurement, right? And providing resources so we don't just have to use off-the-shelf indicators, but we can invest in deriving indicators which we believe best measure our concepts and outcomes of interest.
Thank you so much, Phil. So yeah, not to go for the easy and proxy, try and harder get what you really want to measure. So with that, if I can move to you, Kojo, as now you're leading the financial interventions of BRAC in Ghana, and we have heard like how many clients do you have, whether they're saving or not. These are kind of the initial indicators, but the objective is not to give out loan per se, is their empowerment. So within the practice environment, how do you sort of internalize this, how you put it into practice?
Yeah, no, thank you. I think it's an important conversation, and I'm happy we are spending time on this. So for the benefits of those who don't know BRAC, BRAC is a development organization, more than 53 years since its establishment, and across 13 countries in Africa and Asia, we have partnered with more than 100 million partners. About 96% of the beneficiaries of all our interventions are women. And so there's a very strong focus on women. Our programs are, multifaceted, cutting across ultra poor graduation, and the microfinance, social enterprises. So we've got a range of interventions that we offer. We started off in Ghana, we are in our second year of operations, but I mean, as a baby, we are lucky because we can leverage the expertise that exists in the group, I mean, for our intervention. So we look forward to a very strong institution in Ghana and also making a very strong impact in the entire social development financial services industry. So to the specific question, yeah, I think that the starting point is always what you stand for and giving meaning to it. So for example, at BRAC, our focus is actually to empower women socially and economically. That's like a broad phrase, but what does it mean? So before we start any intervention, let's say in any rural community in Ghana, we do what we call a household survey. So we send field staff into the communities. You count the number of residences or houses in the specific community, who are in those houses. What do they do? Are they economically engaged? What is the age bracket? If they are, what do they do? What is the turnover? What challenges do they have? What options do they have? So you pick all those things in a household survey. Then you analyze to determine where is the need most pressing. At BRAC, we say we go where no one else goes, right? We go to the very remote areas where people are excluded. And then you define your intervention. So the main indicator, of course, is not, let's say, the size of loan you give to a customer. That's good for your internal matrices. But it's really what that loan does for the customer. If you create an opportunity for somebody to save money, somebody who does not have the opportunity to save in that formal environment. And some of these things, when we say them, it appears very far. But I tell you, there are communities 50, 60 kilometers from where we are now in Accra who have not probably seen a checkbook before. Right? Yes, it's not funny. Like just where we are, 50, 60, 70 kilometers out of Accra, there are people who don't have access to a bank account. Right? They don't have it because they've been excluded. And so really, how do we bring financial services to people, to the doorstep of people? Technology has proven a main driver, and we don't have to underestimate that impact. But really, what do you measure? In our business, impact is at the core of what we do, right? And it means dedicating resources to measurement. For a financial institution, you don't want to put in so much budget into research and development. But in our case, it is an embedded part of our offering. So our credit officers or our field staff would always be looking out for what have we offered this customer, whether it's an opportunity to save, it's an opportunity to belong to a savings group, or it's an opportunity to take a loan. What did the person use that loan for, right? And this is measured. So at the first cycle of, let's say, an intervention, 6 months, before you enroll the customer on the second cycle, the question is, okay, what did the person use the loan for? If we are able to establish that, well, I used it to expand my business, to expand the farm, to get some seeds, to expand the acreage of the farm, then you are able to determine that indeed, as a first step, there's something measurable, right? Then you can build on that. So after a 2-year period, you then have a solid base to do proper measurement. And we work with institutions like 60 Decimals on an annual basis to do proper measurements of our interventions and its impact. So measurement is really at the core of what you do, because without it, you cannot say you're an impact-led organization. Otherwise, you just be just looking at what your financial performance indicators are, and that's really internal, not so meaningful to the customer. So that would be my preliminary comment. Thank you.
Thank you so much, and thank you for making this distinction of sort of internal indicators versus what you sort of really care about. So internal is more of a process. That's not the end in itself.
Yeah.
And also sort of one of the points that you've mentioned, that going into remote areas, but how remote can you go? The farther away you go, it's probably less served, but then if you go too far, you have to think about the use of finances as well. If someone is living sort of middle of nowhere, there's no cash economy, sort of primarily subsistence, having a loan wouldn't serve any purpose as such. So making those choices based on these sort of surveys that you have mentioned, how they can use the money, so not just giving the money who doesn't have access to loans. So moving away from a little bit of this sort of geographic targeting, if I can call it, sort of at an individual level. So recently I've been working with entrepreneurs at Insano, so maybe you can talk about your work and also how you identify potential entrepreneurs who would be successful. How do you predict that in your work, and how do you measure their successes?
Hello? Hello? Can you hear me? Okay. Yeah. Hi, so I'm Priscilla. I'm from Insano. Insano is a payment service provider, and we've been in existence for 12 years. When I say payment service provider, we're able to allow businesses to transfer money or collect money. It can be mobile money, it can be card payments, it can be bank transfers. We enable payments on any platform. So whether you're a church, a school, university, any type of company that needs to put payments on your platform, we'll be able to help you to integrate and receive money or send money out. That's basically at core what we do. Insano started in Ghana, and by now we are able to process transactions to 30 markets in Africa. We are licensed in Rwanda, licensed in Zambia, and currently in the process of getting licenses for Nigeria, Cote d'Ivoire, Liberia, and Sierra Leone. At core, as a business, trade is very important to us. And one of the things we've realized is we don't trade a lot amongst ourselves as Africans. We're in Africa, and we rarely trade between ourselves. And if you think about trade, it's almost like a pyramid. In order for us to be able to trade well among ourselves, there should be some sort of level of infrastructure that is in place to allow us to trade. When it comes to logistics, when it comes to addressing systems, it comes to payments, all of those things are things that need to be put in place for us to be able to trade very well amongst ourselves. So at Insano, we see it as part of our core responsibility to work on the payment angle. So we're a payments company. And payment is the first thing you think about if you want to build on top of, because if you build a solution or you start a product or service and you can't accept payment, there's no point doing it. So if the rail for payment is built, everything else can be built on top of it, whether it's logistics, whether it is transportation, whether it is any other financial service. If payment is not there, chances are you won't have other businesses building on top of that. So for us, as a business, we see ourselves processing 50% of Africa's GDP. It's a focus for us, and it's important for us. And at base, it's because we want to enable trade as a business. Now, back to the conversation about measurement. I mean, we are a profit-making business. And if you're in a business like us, measuring things is very important because you need to know what's going on. But aside from the fact that we're profit-making, you're very intentional about customer satisfaction. Because customer satisfaction is what would help your business to grow eventually. A customer saying one good thing about you is better than all the ads you do on LinkedIn or social media. So for us, measuring things is important for us and how it affects the customer. So I'll give an example. We built solutions in the past for banks where banks are able to, on USSD short codes, banks customers are able to send money from account to wallet and wallet to account. You typically realize when you're using a USSD application, you can dial the application and you get somewhere, you get a timeout, and then it drops off and you have to start again. It's the technology, and that's how it works. And we noticed with time that when you look at our numbers, which is where the measurement comes in, you realize that there was a drop-off a lot with certain types of products and services. And we look to find how can we increase people coming back to continue the transaction. Because once you start it and you don't complete it, I don't make money because I'm not able to process for you. So ultimately, I need my customers to be able to process and at least achieve what their aim was. So what we did as a company was we tweaked it slightly where if we build a solution for you and you started the process and it dropped off, When you dialed again, it will take you to the last screen you were on. So you don't have to start your transaction from select maybe bank account, select account number, or the savings or current, select the amount. If you got to the last screen and said you're about to transfer this amount of money to someone, we'll take you back to that screen and you just end that transaction. Just that little change we did increased transaction completion rates significantly in the business. And that's where measurement comes in. Paying attention to your numbers and knowing what value you can give to the customers. Now, as a B2B, I don't deal directly with customers, but my businesses deal with customers. So any value I give to them is value they transfer to their customers. I have businesses that deal directly with females, female only, women only, and I have businesses that deal with different genders. But ultimately, my work and the measurements we have to do is what value can we constantly give to our partners to improve their services so that they can also provide value to their customers. And that's what at base we do as a business. And that's how we measure things internally at Insano. Okay.
Thank you so much. Now moving on to the sort of big policy aspect. So Ministry of Finance, you have all sorts of sectors, competing demands. So from a sort of measurement perspective, when it comes to impact measurement, how do you sort of address what is the impact, and there is also potential political influence. How do you address those? And if there is any particular good example that you would like to share about sort of where on that aspect.
Thank you, Moses. I hope you can hear me.
Yeah.
Thank you very much. On the last scale, most of the measurement we do is how do we have access to financial services? And then what is the percentage of the population that have access to banks, that have access to insurance policy, that have access to other financial services. Then the measurement comes in that once those assets are done, what next? Do we have quality assurance? Do we have better usage? You cannot just open an account and you bring the headlines. There are about 120,000 people have a bank account, but what do they use the account for? So going forward, there are issues that we have to do whereby we try to see what is the welfare of those who have access to the account. So the measurements cut across whereby we try to see how best that people have access to financial services and how best do we ensure that those financial services impact on the individual that have access to financial services. Also make sure that regarding the women, we try to separate it. We have a lot of mobile money accounts. How many of the women try to use mobile money account, apart from transaction, do other services? So all those measurements have to take place, and most of the time we try to get those things at the national level.
And any particular example that you can think of where there was sort of perhaps political pressure on what to measure and not to measure, if anything comes to mind?
Well, measuring, there are certain indicators we all know in Ghana whereby the political play a role, especially the macroeconomic indicators. But when it comes to financial services, I think there's no much influence as to what happened at the financial, though we try to provide policies for market development, product development, among other things. There is no political influence as to develop these products or don't do these products. So maybe the market players are here so they can say what influence they have in terms of policies. But it's just mainly policies that will promote the market.
Thank you. That's great. I mean, I guess maybe when we are all sold on to the outcome, there isn't maybe necessarily as much political pressure. Maybe it's in the in-between. Thank you so much for your reflections. Let's have a round of applause for our panelists. Thank you so much for doing great on time as well, so that we have time for Q&As. So now it's open for anyone to ask any question. I think we have about maybe 15-20 minutes. So if you could introduce yourself, and if you're asking your question to any of the particular panelists, please mention that as well. So, lady over there. Come come over with this.
Say it again. Yes.
Thank you. Good afternoon to everybody. And I will first of all thank the organizers of this meeting for making it possible for those of us working, or we are the rural women here. When I entered, I didn't know you started. I heard the second speaker saying something about women not opening accounts. Like photo exhibition was accepted, you would have heard a lot, because we promoted the women, the rural women, to banks where they were saving. But what happened? Most of them, they will go, they don't know much about current accounts and then savings. They will put their money into current accounts, thinking that 5 months, 6 months, I think they are all supporting me. They'll go and take it. A woman, when you go there, then you tell her your money is finished. I'm not lying. So we need more training.
Exactly.
More exposure. Our last 2 months, about 3 months ago, I was in one of the banks. And I sat with the manager that this thing, that we closed the account, but we didn't write letter to close it. So they are charging us. And we said, no, you can take it to anywhere. We are not going to pay. So we need training, exposure, education, so that we know how to deal with the banks. So all that the women will say that, when you put your money at the bank, then they take it, they steal. So please, I'm speaking at international meeting. And please, all that I want to let all of us know that the banks need to train more of women in the rural areas. Otherwise, nobody will enter into the bank. Because we're able, when I started this project, we opened account to so many women. But how many of them are now keeping the accounts? Nobody. Yeah. Because the bank will do what? Steal it to pay the staff.
Thank you so much. We'll collect a couple of more questions and then go back.
Thank you very much. I'm Lydia Adam, Women and Children Welfare Foundation. I just want to add something to what my sister said concerning banks giving loans to our rural women to trade with. From where the background I'm coming from, I deal with women. Sometimes I have them coming to the house. So, madam, this money we have taken, we can't even pay back. And sometimes I take the interest rates. When I calculate, I have a business background. You see that the interest is even higher than what the woman can trade and get. So finally, we have this rural women, a woman in the market working for these financial institutions to make profits. And yet those who are supposed to benefit, they are laboring. They are laboring for these banks to make their profit. And sometimes I shed tears. Some of the financial accounts, I don't want to mention them, 85%. How can a woman take 1,000 Ghanas to this? And at the end of the day, he's paying 85% of that. How much can he make from that? In fact, it's something else. And these poor people, they take it just to trade to get something to feed their poor children. I deal with women, widows and single parents women. And it's sad. Sometimes I have to take some from my salary to support these ones, to pay the loans off. So please, I am pleading with the financial institutions. When they come, explain to them. And sometimes they take premium. And yet they won't explain to the women that this loan given to you is on premium. And maybe the person is with the money trading and he fell sick. Is the only source. Then they will come and take the small collateral that he has to pay off the loan. Please, it's sad. Thank you very much.
based on what these two ladies have said, obviously the role of the microfinance institutions is very much needed. So the question is, how is the banking sector accommodating microfinance institutions?
Yeah. Thank you very much. I'm Abu from Northern Region. My question is in two folds. Some communities are interior to the point that you can't even get network when you get to the community. Yeah. You can drive 3 hours, 4 hours before you get to the community. My question is, how do these people get bank services? Yeah. And secondly, most of the communities, they do VSLE, Village Savings and Loans. How do we leverage on this? Because trust me, a rural woman trusts her VSLE than any bank. So how do we leverage on this? Thank you.
Wonderful.
I hope we'll have another round, a chance of another round of questions, but there are quite a few around financial sector services, so maybe Kozo, you...
No, I'm happy to take it. I mean, thank you very much for those interventions. You see, I think that, our contributors should actually be sitting in the boardrooms of financial institutions because these are very important perspectives. Let me just try to situate the discussion in the context. From the regulatory perspective, what you describe is a clear case of non-compliance because when you take the Bank of Ghana rules, there are clear guidelines on transparency. So for example, every financial institution, once you are licensed by the central bank, you have a responsibility to transparently disclose the conditions of a loan to your customer. In fact, you are even required to give the customer that term sheet, right, in advance of the customer taking a loan, so the person can decide whether or not he or she wants to even continue with the financial transaction. And there are several rules there that is aimed at protecting the customer. So institutions that don't do that, it's just a clear case of non-compliance that we need to encourage each other as an industry to comply. Then there's the self-regulation bit. I mean, most of you will be familiar with the client protection principles around transparency, around avoiding unfair pricing, around product and service delivery, etc., etc. I can speak for BRAC. I think that BRAC is a very, very transparent organization. I mean, we are very committed to the client protection principles. It is, in fact, part of our DNA in terms of our product and service delivery. And compliance with regulatory requirements, it's a no-brainer. I mean, for an institution that has been in the market for 53 years, I mean, it speaks to the credibility of that institution. And in Ghana, we can't do otherwise. We just have to follow the tradition of it. But you see, I think it's a call for the industry itself to do a lot of self-introspection, right? And also for the regulator to understand what is happening and to support the industry to comply. But you see, interest rates, I think there are several indicators that go into the pricing of interest rate. I don't want to go into that level of debt. But you see, it's a question of options. If a customer has options, there's no reason why they would be limited to that community money lender who is going to charge interest rate of 85%. That is why it's important that regardless, like our brother said, how far you live in Ghana should not be a reason why you don't have access to financial services. Traditionally, the services have been concentrated in urban, peri-urban Ghana. But we need to go to rural areas because they also need access to it. There are challenges. I mean, the infrastructure. We are working in communities, and my colleague who manages that desk is here, Apia. We are working in communities like in Carrier, not too far from the center of Kumasi. And connectivity is a problem. So we have a digital field application that we use to collect data from our customers so we are not manual
and inefficient. And sometimes getting a signal, right, it's not very far from the center is a problem. Right? So you are not able to deliver services efficiently as you want. What do? Now, the IT guys tell us that, okay, there's something called Starlink. That is more expensive, but more reliable. And we are piloting it in some of those markets. There are markets we go to where the infrastructure does not exist. You have to actually work with an MNO to take that infrastructure there. It comes at a cost, but it also speaks to the commitment you have in working with rural areas. So, ma'am, we need to deal with providing options to our rural women. And financial literacy, to be honest, I feel like it's at the core of what we should be discussing as development practitioners. I mean, we are currently working with the Mastercard Foundation on accelerated impact for young women. Feedback from women, from the perspectives of measurement, they always say, look, what we need is how to use our money. It's not so much how to get money, but what we do with the money. You know, in Ghana, our focus has always been options to get money. But the problem is not how to get the money. It's what you use the money for. You get it? You take a loan only when you need it. You don't take a loan to buy a cloth for a funeral. You don't know. I mean, it's a don't know. You take it to invest in some economic venture that can generate some profit for you to be able to pay the principal and still remain in business. But what do? That misconception, once there's access, I'll go and take it. What I do with it is secondary. So financial literacy is extremely important. I'm happy to say that at BRAC, it's actually embedded. So for all the groups that we work with, as part of our offering, there is financial literacy. Not only that, digital literacy on how to use a mobile phone to perform financial transactions. But it should not be limited to just one institution. I think that we need to scale it across so that there can be meaningful impact in the industry as a whole. But I completely associate with all the concerns. These are things we deal with on a regular basis. We just need a lot more responsibility. Not the Bank of Ghana holding a stick to hit the industry, but the industry itself, self-regulated, and knowing that it's just the basic rights that you give your customers, their rights and obligations, and you try to meet them where they have a need the most. So it's really a call for all of us to be a lot more transparent and disciplined. Right? Thank you.
Right. Thank you. I'll come to you, Phil, but before that, very quickly, so this is not just one financial sector, financial service provider, it's a sectoral issue. And we hear double bottom line, triple bottom line, climate is the new one. But from the Ministry of Finance perspective, how do you sort of enforce that this sort of, if there are three bottom lines, all three are bottom lines, not one bottom line, two fakes, you know what I mean?
Thank you very much. Mainly, we leave that aspect to the regulators. But there is that aspect we also see that how do we protect the consumers? That's whereby most of the regulators have decks whereby people like Madam and Co can report their dealings with at least to the institution and scale it up to the regulator to enable the regulator address the issue and address the various issues. He made mention of interest rate and then he doesn't want to go into it, which is a fact. There is something called reference rate, which the Bank of Ghana normally issue. But from practice and from organizations like this and from programs like this, you hear that those at the receiving ends are at the mercy of the financial institutions. So definitely we have to do things in such a way that, one, we educate the members. As Kojo said, financial literacy is key. Now remember, it is one of the core of the Ministry of Finance, whereby we try to educate people on responsible borrowing, savings, among other things, and also ensure that not only are they able to do things, but they also make sure that they comply with rules and regulations as it entails.
Thank you so much. So it's sort of sectoral measures.
Let me address the
VSLA.
The VSLA, yes. Somewhere last 2 years and last year, there was a project under the ministry whereby we attempted to link some of the VSLA to financial institutions. Some are microfinance, some are rural banks. and then some of them are one of the major banks. So the aspect is that they have a season, but how do we ensure that they have a longer process? And we also use their concept, not the banking concept. So if you want to lend to the VSLA, you lend to the association, then the association distribute the money, collect it at their weekly meetings and repay back to the institution. So it's something ongoing, and we see how best we can scale it up and make sure that it is reach the greater number of VSLAs. Thank you.
Thank you, Phil.
Yeah, I just wanted to quickly add something from this very interesting exchange. I mean, so measurement, of course, is an important type of information, right? And we have this asymmetry, though, in measurement that arises. I mean, Priscilla gave this fantastic insight that they're able to use administrative data to know exactly when the customer stops their transaction, right? And BRAC has fantastic information about their clients as well. But how much information does the customer have about the services they're using? And one of the beauties, of course, of digital technology is it does have the potential to reverse this asymmetry, right? Where not just through exits, I mean, Kojo's point was we need more options for participants, or beneficiaries in rural areas, banking options, but they also need greater voice, right? And through digital technology, we have access to voice through reviews, right? So maybe imperfect, but we've seen the strengthening of voice through Google reviews, Amazon reviews, other platforms that give information to others about the experience they've had. And if it's negative, that contributes to a feedback loop, right? So this asymmetry of information has benefited. We use measurement as a key source of information that helps us in our feedback loop. Is this policy working? Is our product being taken up, right? Is this study intervention effective? And it just strikes me that digital technology can also provide this information to end users to strengthen their own feedback loop and voice.
How are we doing time-wise, MC? 5 more minutes, okay. Not sure we'll have time for another round of questions, but maybe if you can make it sort of really quick, short. Yeah.
Hi, good afternoon. My name is Kweku Saki from the Better Than Cash Alliance. A lot of what I was going to say was taken up by the gentleman from Ministry of Finance. The lady was talking about literacy. I work with quite a few cocoa farmers. We did a survey of 800 female farmers in the Western region, all of whom had mobile money accounts, all of whom identified the interest they got on the mobile money account as a big key factor for them having it. Yet not one of them, zero, had actually a savings wallet, which gives them 3 times the amount of interest that they were very happy about. I'm glad you talked about the VSLAs. These exist. We have fintechs like Insano. We have financial institutions like BRAC. We need to have a little more collaboration. Is there any collaboration going to actually digitize these VSLAs and link them to these financial institutions? Because the peer learning is the most effective way of digital literacy or financial literacy. They learn best from their peers. If we can get some collaboration going to digitize these VSLAs so that the information can be relayed effectively to financial institutions that can then on-lend at much more competitive rates with better information on the ground, this whole thing will be solved. We have the answers already, but we need to have some more collaboration because there's no way BRAC is going to go around all the villages educating the women in an effective manner or transfer that transparent information on lending in a manner that they can actually access. So my question is, are you looking at collaborations based on what is on the ground and based on what works effectively?
Thank you for that intervention and the question. Maybe as a last question over there, maybe just these two as the last questions, and hopefully we'll continue discussing peer learning, as you mentioned.
May I thank you once again? With the financial institution, we are now requesting, if possible, have a meeting, educate us on the modality or what the bank is now heading for. Somebody may not go to the bank for about 2-3 months. They will tell you your account is frozen. She doesn't know anything about it, but the highly educated people knows it. So let us know whatever there's any information, so that we all, not me, but with all the rural people or whatever, we will let them know. If possible, please, let's have something. I'll give you women, you train them for us, so that we move ahead. Thank you, as part of your project.
Thank you so much. There's one hand there.
Thank you very much. I am Amanda Van Thompson from Mastercard Foundation. Mine is a contribution. I think very quite often we focus on rural Ghana, forgetting that there are rural communities within Accra. Not quite long ago, I had some interaction with people along the Accra coastal lines. And it would interest you to know that they do not want to have any dealings with the banks, because they tell you, you save just as mom said, and then you go to the bank, your money is finished. Once they are paid, once we pay them, and I get to the bank, the people tell me that, hey, Amanda, your people have come for all their money. The day they know they are going to be paid, they are right at the bank to cash everything out, because they don't want to have their money stashed. And so to talk about financial literacy, I think we should disseminate the information very down to the core, and not forgetting that Accra also have rural communities amongst us. And then with the internet connectivity, it's even in Accra. There are times that you try, and then you can't have access. So if some of these things are educated to us, maybe in other languages, it will help people. Because if people who are, excuse me to say, not in a certain education bracket, they are not able to understand financial literacy. And so I think maybe Ministry of Education can start something in our schools where we can learn more of finances attaching to the math that we are learning in schools. Thank you.
Yeah.
Thank you. My name is Donatus. Just to add, so I think with the digital inclusion, last year, 2 years ago, the Bank of Ghana also made an attempt to digitalize our currency. They call it e-currency. I think it's another way we can look at it to maybe improve our digital inclusion drive. Because in Nigeria like this, they have the e-Naira. And the e-Naira has been implemented in rural areas where banks don't exist. So if the central bank and that of the Ministry of Finance can come together to collaborate to see whether we can speed the adoption of digital currency in Ghana, it will also help, especially by removing that kind of institutional barriers where we can make by educating the people in the rural areas in the use of digital currency.
Thank you so much. We are at time. So I would like to hear like one last sentence or sort of one final thought from each of our panelists about all the conversations that we had around the sort of limits. So I'm hearing about the limits of inclusion in banks. It doesn't seem like we should include everyone in bank. The same can be applied for digital inclusion. Maybe not everyone should be included because there could be unintended consequences. So intention isn't enough. There could be pitfalls as well. But I guess for measurements, we will have to keep pushing the limits of measurement so that we avoid those pitfalls and make the most. So with that, I would ask each of our panelists from Benjamin Yu to Phil, any final thought you'd like to share?
Thank you very much. One major thing I picked from the earlier presentation, I think amnesty was about improving digital literacy, financial literacy, and then cultural norm about women. Based on the discussion so far and the questions coming, it boils down to one thing: financial literacy. The school curriculum, it has been on board for a number of years. Some of us think that it's high time we do that. We start from the teacher training because they are going to impart the knowledge. They come down and and it should be examinable. Up to about secondary school, somebody should know what a checkbook is or what the leaflet of a check, what are the features of a particular leaflet of the check. Thank you very much.
Thank you, man. Priscilla.
Hello? Okay. I think I'll use my last point to address the gentleman in blue, Alex's question. He asked if there can be collaboration between banks, fintechs, the regulator when it comes to helping. I think what I'll use is an example of what we did, and maybe it can be of value to some of the other players. In Zambia, so we operate in Zambia. In Zambia, we had a collaboration with an NGO and a bank and ourselves. We were the technology providers and a telco. So what happened is, I think in the copper belt in Zambia, there are a lot of farmers, and a lot of them are women, and they have a lot of susu groups. So what they do is, you know how susu works, where they meet in small groups, and usually there are 3 people who are like the main people who have the keys to the box. There are 3 padlocks on the box, and you can't take money out of the box unless all 3 people have bought the keys and opened the box and taken the money out and locked it again. So whenever you're giving money out, everybody's aligned. There was some transparency to that effect. So we were asked to help translate that solution into a digital format so that it's also convenient. There's a lot more transparency for them. So what we did with the team was we actually had to go there and spend time with them, ask a lot of questions about their processes, why they do things the way they do, so that now you're building following their pattern, not what we have built and given to them to do. So everything we built was based on the patterns in which they operate as susu groups within the copper belt. So what happened is we built it on USSD, and because the telcos were involved and the banks were involved, for us, we agreed that there were going to be no charges on the platform. So if you went and you put 1 CD on your wallet, it was exactly 1 CD, nothing else was deducted, because there needed to be a way where we get them to adopt the solution. And those were some of the decisions you had to make, incentives you had to give. So we did that where you build a solution, you dial a short code, everybody had to sign up. And there's a lot of training for months, weeks on end, to show them how it works, sit with them after it's been done, let them see the value over time. So if anyone wanted money, there was a way you could request for the money. And the 3 people who would have had the keys needed to approve by putting their mobile money PIN as they will. When that happens, the money is immediately sent to the person's wallet and they receive it. And then when you have to pay back, there's a way we show you how you have to pay back to the group. Everybody within the group can get SMSs to know how much is in the group, how much money has been given out, what is happening with their money. And then there were no charges. So to some extent, there can be some collaboration between the different players if we make a decision to do so. The challenge with some of these things, especially for profit-making organizations, is as you're thinking about financial inclusion, you're also thinking about your business model and the fact that it's also sustainable. That's what tends to happen. But usually you'll be able to find some synergies at some point. For us, the synergy was where we were not charging, so we didn't make any money on the project. But there was a lot of data and insights we got that helped us to improve products and services for other partners who would have been paying us. So we're able to make those trade-offs at some point. But the value in that is we started with a small group of people, and as of now, we have over 200,000 people using the platform. And this is not because we went out to the 200,000 people. It's because the women themselves told the other groups about it because of the value they saw. So it became something that they all use now. Now, there's no marketing. We don't make any noise about it. People are just signing on their own. And they are being taught by the other women in the other groups. So that's how value, I think, can be created. And there can be collaboration between banks, telcos, and civil society to be able to offer solutions and help with financial inclusion. Yeah. So to your point, it's possible. Okay.
Yeah. Thank you. Yeah. So Kojo, any final thought? How you
no, thank you. So just to say that, I mean, BRAC is very much aware of the urgency, the importance of financial literacy. And as I said, in partnership with the Mastercard Foundation, across the 7 countries we work in Africa and Asia, we have a very ambitious plan
to provide financial literacy to more than 1 million women in the next 3 to 5 years. So that program is ongoing and is an embedded sort of part of our service offering. So I think we just need to engage some more at the national level so this becomes sort of part of what the industry offers. The conversation on the ecosystem engaging each other, I think it's an important one. We need to talk about it. I mean, we have the various associations, like Bankers Association, you come to the Savings and Loans, FinTech, but I haven't attended any program where all of us are seated in one room like this and asking ourselves questions whether it's working or it's not working. So I think we need to engage some more. I mean, I see my friend Apia Adumako of Cards International, who's been doing a lot of advocacy on pricing. As recent as 2 days ago, he was talking about ATM charges and how unfair they are. And he's engaging the central bank to put in some interventions to moderate any excesses in that. So I think it's not just the regulated institutions. There are a lot of actors who have a strong voice in that space, and we all need to speak together. Look, in closing, if you take any institution, just read their mission or their mission statement and their objectives. In there, you will see that there's a focus on the customer, right? I think what we should do is that we should listen more to what our participants and the contributions that have come. In listening, we get a sense of the impact of what we are doing, and we are able to modify, our offering to meet their needs. We write very nice things about what we want to do, but we practice something that is completely at variance to. So we need to really listen some more. So we thank you for the feedback, and we'll do better going forward. Thank you.
Thank you. So we have vision, mission, goal, strategies, but we rarely measure our missions, right? So Phil.
Yeah, there's a fantastic contribution talking about the importance of peer learning and social learning, and network effects, learning from others, and the value of a technology increasing as others adopt it are fundamental to digital technology adoption. But relative to its importance, it is actually understudied, right? And this is something, especially when it comes to measurement, how do we measure social learning, peer learning, network effects? There's a great network effects literature in development economics and economics, but applications to digital connectivity, which is, again, it's so core to that, technology diffusion is surprisingly understudied. So bringing that, I think, more to the fore, and as a question of measurement, how do we measure that is really important.
Thank you. Fantastic. That's a nice closing one, because we are also peers. We are learning from each other, and we are trying to find areas of working together. So let's have a big round of applause for all the panelists and yourselves for your attention and contribution. Thank you so much.
Yeah, thank you. Oh, sorry. Should we stand?
All right. So please, I was told there's a gentleman here who is helping solve the service charges in our various banks. Please, thank you, sir. Let me give you one. The charges that from my own account to my wallet, my own account, and then the number is the one on my account. The charges, it's so outrageous. So please, I think I'm speaking your mind, sir. God bless you. Please, you have a remark to that. Good.
So very soon, I'm sure that policy directions will come from the BOG with regards to some of these things. But especially with the ATM charges, you are going to use your bank ATM machine and it's off. You go and use the third-party bank and then they charge you. Meanwhile, every month you pay a fixed fee to your bank for using that. The issue of the moving money from your bank to your wallet will also be addressed. The governor is very keen on it. And
God bless you on
to
that.
say that this governor is very, very responsive to public cry. But I wanted to also talk about the financial disclosure. Most financial institutions, when they are giving you something, they don't disclose fully to your knowledge. They hide certain information that will help you to decide that this is a good or a bad thing to go on. But it is, as Kojo said, it is the
Please, can we be on the same page? Thank you very much. I know anything that has to do with our accounts, we are interested. So, no wonder I'm getting this reaction. But please, let's listen to,
The disclosure, it is in the BOG's directives that whenever someone wants to take a loan, you are supposed to give the term sheet. Don't just give it to a market woman who can't read. Even in law, the law says that if you sign an agreement with an illiterate, you are supposed to annex a jurat to say that you have explained the thing to the person that the person understands. But most financial institutions are not doing that. And I'm very hopeful that the new governor is very keen on most of these things in terms of deepening consumer financial protection in this country. Thank you.
All right, thank you very much. I know how this thing sounds. It's not easy, but nyamebe. All right. As a way of, we are not going for the tea break here. So if you see that on your program, don't worry. You will definitely be given tea, but not now. And so I went to the public school when I was in the junior high school, Mekosaito. My brothers who don't understand what I just spoke, I went to the public school. And I'm sure most of you too went to the private school. Our time, we call them Pipreti Forum. And then international school. How many of you went to private schools here? Hey, okay. Oh, let me see the private school people. You know, when you see the addressing alone, it tells you that they went to private school. Oh, let me see you. That are the bees. That are the bars. Please, can I get two of you here? Two. Only two. I need two. I'll be glad if we miss. We get a boy, we get a man, and then. Oh, you are at the B. Your body shows. Me, when you look at my body, me, I'm at the B with hard labor. Yes. Oh, I'm not getting any private school here. It is a tough one. I'm going nearby. Mom, right. I need two. Hey. I need two private school. Those who went to private school. Yes, you're working alone shows that you are that about. Who again? I need one male. I need a gentleman. Oh, you can come. If they are not coming, come. Let's. You know, only ladies are at the beach. And then please, public school, my people. One person should come and attach it. So with the men, we went to the public school. Today we are coming to have a serious competition. Yes. Can we get extra mic? Now, you know, those of us who went to the public school, you know the kind of songs we were singing. And then the private school people. So we know our songs. Unless, of course, maybe we went to a DDB school, a DDB private school, public school. You know, we have some DDB public schools. No, we went to the village one. Yes. And you went to a private school, not best rhymes, best nursery songs. Hey, you went to a public school. You went to a private school. It was spectacular low shows.
My name, Sarah is my name, my name.
Okay, now, my people. Also, we don't teach. When we bring it, you see everybody saying it.
6th of March, 1957.
But you know, no, you didn't finish. The part that I wanted to hear, you did not sing. So start. Start.
6th of March, 1957. Ghana. Independence Day. Alewa.
Now, I don't know whether we were taught wrong or not. Within the song, the power, Iman, so power. What's a man goes to school? All right, you give us another one, and we will give you the one that everybody will sing. Yeah, our songs are common, you know.
Okay. Okay. My head, my shoulder, my knees, my toes. My head, my shoulder, my knees, my toes. My head, my shoulder, my knees, my toes. They all belong to Jesus.
Show me your head, oh.
This is my head.
Show me your hand, oh.
This is my head.
Show me your belly.
This is my belly.
And then the other one, show me your bogo. All right, thank you very much, my people. You see, this is the typical Ghanaian schools. Those of us who went to the public school in a village, you know, the ones in Accra, they are not being faithful. Like this gentleman, he went to the Saito in Accra. Come and sing Saito songs here. Says of my native. What are you telling me? Dria, oh, Dria. Kramen, Dria. That is us. All right, thank you very much. So we have another presentation from Mastercard Foundation. Please, if you're happy, just all right, so our next presentation will be done by Mariam Esther Dasanu. She's the Director of Gender Programs, Mastercard Foundation. Esther joined the Mastercard Foundation in May 2023 to lead efforts in expanding dignified work opportunities for young women in Africa. Previously, she managed the African Development Bank AFAWA initiative, addressing the $42 billion women's inclusion in insurance and SME finance. She also managed the Global Banking Alliance for Women and co-authored key reports, including She for Shield and G20 publications on women's access to finance. Please, with a resounding round of applause, let's welcome Mariam Esther Dasanu.
Good afternoon, everybody. After the fantastic singing from everyone, I'm sure we're very energized now. Let me start by saying how honored I am to join you for this urgent but also very hopeful conversation on advancing gender transformative digital connectivity in Africa. I was very interested, excited by the conversation from the panel, and actually allow me to piggyback off of where they kind of left off specifically with two stories. The first one is from a rural community in Uganda. So as a matter of fact, not too long ago, just 3 weeks ago, I met with this group of young women, and I stress on young women, but in a second I will tell you why. And these young women were in a VSLA. Every week, as the panelist was describing earlier, these young women, they meet and they save a certain sum of money. Very often, it's very, very, very small amount. To some degree, actually so small that they're not even visible for microfinance institutions, if we're honest. Now, they did so very diligently, and for them, they were building their livelihoods. So we're not even talking about entrepreneurship just yet. For them, it's really about living better lives, being able to provide for themselves. As a matter of fact, they'll tell you it's about dressing better. It's about going from one meal to 2-3 meals per day. It's about paying school fees, and it's about enabling our children to have access to medical care when they need it. Then, one morning, the box was stolen. The money was no longer there. Their words, not mine. There were no receipts, there were no records, there were no backup, and as we heard, they're so far remote and removed. There is no bank anywhere near. Now, the interesting thing is, while this thing happened, these young women, being as resilient as they are, actually started to save again. Except they started to save in the same manner with another box. Why? Because there was no other system. Now, let me move to another country, Kenya, where Esther, my namesake, receives a community pass smart card, a biometric offline enabled digital ID that works even without a phone. And the fact that it works without a phone is important. Why? Because very often these young women don't have the means to access the smartphones that we all have in our pockets. Some of us even have 2, 3. Right? If they have a very, very basic phone, it's already something for them. Now, through a program that was supported by the Mastercard Foundation, she used the card to open a mobile wallet, receive training, and start a produce delivery business. She now transacts through WhatsApp, pays suppliers digitally, and has hired 2 other young women. 2 stories. Technically, same ambitions, but the difference is one was supported by a system that thought about her, that took her into account, that understood her realities. The other created a savings mechanism, sure, but then failed to protect her, to protect her money. Now, why is this so important? Why now? And why did I say young women? Notice I didn't say women, because women are not a homogeneous group. Not only are we not a homogeneous group, but here in Africa, we make up 50% of the 75% youth population of the continent. As you know, the 75% of Africa's population is actually below the age of 35, and 50% of that are young women. We stand at a demographic crossroads because by 2030, over 1 billion people of working age on the continent, right, will remain underconnected, underfinanced, and underrepresented. 50% of which are young women. Now, a research that we conducted with McKinsey actually last year shows that if we were very intentional about focusing on young women, their contribution, which by the way is on the decline currently, so in 2000, young women contributed about 18% to Africa's GDP. By 2022, it fell to 11%. We can talk about the whys of that later, but here we are. Now, the same research shows, as I was saying earlier, that if we were more intentional about meeting young women where they are, about understanding their realities, remember the young women with the boxes, their contribution could actually rise to $287 billion in the next 5 years, so by 2030, representing a 5% increase to our current GDP. The World Bank conducted a similar study taking the same approach, except looked at adolescent girls who are 10 today, and by 2040 will be 20, 25, 20. And the contribution that by 2030 could be at $287 billion becomes a $4.1 trillion contribution. And guess what? Having access to digital services could be the way to accelerate this progress. The challenges that we face, though, despite all these promises, is the fact that, you know, less than 25% of women in Africa are likely to own a smartphone. For young women, as I said, it's even worse, right? Especially when they're in rural areas, peri-urban areas, and even in the urban poor areas, as one of the audience members pointed to earlier. Internet and the use of mobile internet remains a huge challenge, especially in areas where you have no network. Limited access to digital IDs, financial tools, and digital literacy are a huge impediment for young women. And for me, on the point of digital literacy, it's not just about understanding, right, or being able to use the smartphone. But as we were saying earlier, it's really about knowing what are the implications of the usage, right? What do you do with your phone? How do you use your phone? How do you transact the money from one account to the other, from one company to the other, et cetera, et cetera? All these things are really important. Affordability, a challenge. Norms that discourage girls from using technology, reality, and a challenge. Digital platforms that are not designed for young women with low literacy or irregular income. And the lack of digital safety and accountability remains an impediment for young women. But we actually have the ability to change that. And gender transformative policies in action are actually part of the solutions. So I want to speak to some of the countries that are doing interesting things that we could more intentionally learn about. So in Togo, during COVID, the Ministry of Microfinance created Togo's Novices program, using USSD codes and biometric IDs to send cash to over 600,000 people, prioritizing women and informal workers. No smartphones, no literacy required, just bold, inclusive design. In Nigeria, the Women's Financial Inclusion Framework and the Wi-Fi Code brought together 92 financial institutions into a shared commitment. They committed to intentionally look at women across all segments, young and old, rural, peri-urban, and urban. And the agent network strategy builds a female agent workforce to improve last mile trust and uptake. And this is so important. The number of young women that I meet who every day tell me we are who we see. If there are no role models that are actually using these different products, these different tools, etc., automatically we kind of self-select ourselves out of the process. It's not for us. And as we were talking about it this morning, all the different presentations talked about the importance of context. Context is real to create the kind of financial products, financial inclusion products that young women need. In Kenya, the digital economy blueprint integrates mobile money, ID systems, and broadband to service young people. And as a matter of fact, with the foundation, we've supported programs like Ajira Digital and eMobilis, which train young people and place them in work, but with a digital wallet here as well. And then in Ethiopia, we supported a program called the Kefia program in partnership with both the foundation and the government of Ethiopia to deliver digital cash transfer to over 300,000 young women using biometric smart cards linked to mobile wallets. And it's a clear example, basically, of how digital ID, finance, and policymakers can work together to reach those that are the most underserved. Now, because young women are so critical to Africa's transformation, Africa's growth and development, the foundation has made a commitment to focus its 30 million youth in work target, and of which 70% of that 30 million will be young women. Because again, this is the most underserved, the most marginalized segment of our population. So as of now, we're at 8.2 million young women in work, so we're present in Ghana. We've heard about the Accelerating Impact program that we are implementing with BRAC, which contributes to these numbers as well. But our aim is 70% of 30 million, which is 21 million. We're only at 8.2 million, so you will see and agree with me that there's a whole lot of work to be done. Digital access, again, could help us accelerate that significantly. So from a policy perspective, I think to truly advance gender transformative technology, connectivity, there are a couple of things that we must do. The first thing is data. It's the starting point. And for policymakers, it's about being more curious about what happens on the ground through gender audits. Be intentional about closing the gap, but start with the young women. Put the young women at the center of what we're looking for. I think Phil on the last panel was the one to say, you know, be intentional about what you're trying to measure. If what we're trying to measure is how quickly young women are contributing to our economies because this is important, well, let's make sure that when we're capturing the data, it actually starts with them. What if all national digital infrastructure, ID, wallets, broadband, were audited for gender impact and reach, starting with young women who are our present and our future? We also need to set policies that understand and address gender norms, because those two things have to go hand in hand. We cannot talk about policies on the side, but leave gender norms on the other. And it's interesting because CGAP actually last month published a report speaking specifically about the role of gender norms in women's ability to own assets and properties. And the finding, which I think we were all appalled when we read it, said that why is it that women who are a property would own property? Yeah. If as a woman I'm a property, why would I own property? So it shows you to some degree how some of these things are so ingrained in our cultural realities that if there is not, you know, some kind of conversation at policy level that influences, changes these beliefs, then technically it doesn't matter, right? Whether I have access to a phone, whether I have access to an account, if I'm not allowed to have property, then what will that do? What will that change? So it starts there. While we're doing that, it's important to work very closely with private sector. And I think the panel before, right before my intervention, spoke to that. It's about subsidizing, lowering the cost of devices, data, and access, because young women, based on where they are, remember the income may not be that constant, can't pay their way into a digital system that's designed to actually leave them out. It is important for more public-private partnership to close the affordability gap, but to also think about innovative solutions that enable young women to set on their growth journey. And I think that's also another important point. Financial inclusion is not a horizontal line, right? It's very much a staircase, as I said, to the top. And so as I was hearing the contribution from the audience earlier, I think we can clearly see that, yes, it's about financial literacy to some degree, but it's about the starting point. Where are you starting from? If you're at a VSLA, basic VSLA, should you actually be talking terms and accounts and all of that? Or should you actually be figuring out how you grow from your VSLA to whatever the next step of the VSLA is? And I think it's important for us to be very clear as to what that graduation mechanism is and what is the role that digital services play within that. It's important that we invest in community-based digital literacy, and training must happen in the spaces where young women already trust. And I think that was the point that was being made earlier. They learn better from their environment and from their peers. It's because they've seen their peers do certain things that they pick it up and that they do it. It's because they've seen their peers grow that they're also yearning for that same growth. Savings groups, schools, clinics, and in formats that meets them where they are. Designed for low literacy, irregular income, and safety. Simplify your KYC requirements, I think is important. And I think as development practitioners, we often do a lot of pilots. We pilot. It's time to scale. Let's look at what works and let's scale it in as many areas as we can, as many countries as we possibly can. And finally, design, as I said earlier, starting with her at the beginning, at the center, and at the end of the journey that we're trying to take her through. Her realities, her intersectionalities are really important to take into account. And I think one of the panel in the morning very much spoke to that, right? We're looking at financial inclusion, but the road to financial inclusion is filled with so many different barriers that no matter how great the product itself is, because we have not addressed those many barriers, she still will not access financing. So, back to where we started, the women in Uganda who saved in a box reminded us that what happens when we leave women out of the digital future can be very costly. Esther, who received the card, the training, and a system that trusted her and put her at the center of the product that was being developed, reminds us of what is possible when we design for her, not without her. Digital connectivity is not just a tool, it might just be the bridge and the multiplier that accelerates the opportunity for young women on our continent to contribute way more than what we're even measuring. If we are looking and aspiring to the Africa we want, we need to do it right. And doing it right is starting with her. Thank you very much.
Okay, so we are breaking for 15 minutes so that we come in the last session. And that will be presentations. So let's fast 15 minutes. Thank you. interlude. Please, it's time. Those of us outside, kindly take your seats. Please, it's time. Those of us outside, please. I can see most of you are having convo out there. Please, when we finish, we can do that. I think we have the next 1 hour to close, so please. Okay, please, you can come and sit with your... So you can have it and then take your seat so we can start. This session is going to be very, very interactive because it's something we could all relate. And so let's take our seats and do this. All right, so I'm going to introduce to you the chair for this session. And they are going to present on women's use of smartphones, expanding access, and then enhancing autonomy. So this is going to be led by Professor Peter Korte. He is a professor of economics at the University of Ghana, the director of Institute of Statistical, Social and Economic Research, and executive director of the Refined Research Project. Professor Peter Korte is a professor of economics with over 24 years of experience in development finance, private sector development, and monetary policy. He holds a PhD in development economics from the University of Manchester, with additional degrees from the Universities of Warwick and Ghana, University of Ghana. He is the director of ESER at the University of Ghana and executive director of Refined Research Project. Professor Korte serves on several boards, including the Agricultural Development Bank, the Anga Project Ghana, and RENAPRI, a member of the Ghana Academy of Arts and Science. He has held senior academic and policy roles and has over 80 peer-reviewed publications. This is an elephant in academia. At this moment, I'll introduce to you our esteemed professor, Professor Peter Corti. Please, let's recognize him with a round of applause.
Thank you very much for the elaborate presentation. Ladies and gentlemen, I know you had a very busy day, but very fulfilling day. This is the last session, but I'm sure you will enjoy it because it ties very much with the elegant presentation that was done before we went on break. So you will indeed enjoy. We are going to look at women's use of smartphones, expanding access, enhancing autonomy. And I'm sure you heard some of those in the previous presentation. Enhancing access, expanding access, enhancing autonomy. This can be a whole conference. I mean, just these two. There'll be a lot to talk about, but we'll do this in 55 minutes. We all know that smartphones are a vital gateway to digital connectivity for women in low and middle income countries. However, many face persistent barriers in accessing and meaningfully using these devices, ranging from cost, limited digital literacy, to restrictive cultural norms. These challenges raise critical questions about how we can not only put smartphones into women's hands, but also ensure they continue to use them in empowering ways. This session will present the much anticipated headline results from the two impact evaluations of smartphone distribution programs in Malawi and in India. The only known studies to date examining the mid to long-term effects of such programs on women's empowerment in this context. Supported by We Define initiative, the studies offer new insights into what works, what doesn't work, and what remains to be addressed. The presenters will explore key findings, practical implications, and persistent challenges. Each presenter will have about 20 minutes, and then we'll leave the rest for questions. We have two main presenters. We want to be very efficient with our time, so they will both present back to back, note your questions, and then when they finish, we'll ask questions and have discussions. Then we can say goodbye to each other, go and rest and come tomorrow. I have very able presenters. We have Professor Philip Rossler. I hope I got the name right. From the College of William and Mary. Is Professor William here, or we presenting online? Yes. Please take your seat. No, yeah. No, you take a seat first. So you go. Yes, please. Professor Rossler is the Margaret Hamilton Associate Professor of Government at William and Mary, where he also serves as Associate Chair of the Government Department, Co-Director of the Digital Inclusion and Governance Lab, and the Director of the African Research Center at William and Mary Global Research. He holds a PhD from the University of Maryland, and he's going to present on improving women's economic empowerment through mobile phones and training in Malawi. So that's the first presenter. Then the second presenter, I hope he's here, or is he here or is online? We have Simone, yes. Oh yes, we are gender balanced. Yes, please come over. We have Simone Sahana, right? Shana, yeah. From University of Southern California. She's going to present on pathway to women's empowerment through smartphone and enabled digital finance. Simone is Associate Professor of Economics at the University of Southern California and a Scientific Director for Gender and Inclusion Economics. She has been a member of several organizations, affiliated with several organizations, research organizations, including JPAL, SEGA, NBER, and holds a PhD from MIT. And talking of MIT, ladies and gentlemen, we used to have an old professor who studied in MIT, and when he presents a paper and you criticize him, he'll tell you, I'm from MIT, you know. But I hope she is not. Yes, he won't do that. You are free to ask questions. Yeah. Okay, so on that note, let me invite the first presenter, which is Philip. Please, you have 20 minutes to present. Thank you very much.
Okay, thank you so much, Peter, for the nice introduction, and thanks again to BRAC and IPA for hosting this fantastic convening. So I will be presenting joint work with a research team, including Dr. Shreya Bhattacharya, who is at William & Mary, Tanu Kumar at the World Bank, Peter Curl at University of Michigan, Boni Dulani, who's at the Institute of Public Opinion and Research in Zomba, Malawi, and then Dan Nielsen at University of Texas. So if we can go to the next slide, so the motivation here is pretty self-evident. We want to think about what is the impact of digital connectivity, owning a smartphone, on economic well-being. So we all are beneficiaries of the smartphone revolution, many maybe even benefiting right now. And why do we value our smartphones so much? Because they're this incredible enabling technology, right? They increase our access to information, new forms of communication, access to all kinds of digitized services. And now, of course, with generative AI, we have generative AI at our fingertips. So when thinking about digital connectivity, probably the most to benefit are those with the biggest constraints to access to information and communication, right? So we can think about low-income households, other marginalized communities. They would benefit most from this technology, but of course there are serious, severe structural constraints that hinder their access. So next slide. So there's a growing body of research of what is the benefits of smartphone access. And of course, not just with the smartphone comes this access to digital connectivity. We've seen other research showing how digital connectivity can lead to economic transformation in terms of labor shift, moving maybe from the farm sector to self-employment to formal employment. We've also seen, of course, the great body of work supported by We Define and others on access to digital financial services. The mobile phone, of course, is your wallet, as we know so well. And then, of course, as we've had the digitization of the economy, we have all these service providers supplying valuable services, healthcare services, news services, communication services that we can access on our phones. So in this study, if we go to the next slide, we build on this research, but what we do in a novel way is to implement a randomized controlled trial among women who do not have phones to causally identify what is the impact of smartphone ownership, right? So there's a large body of research thinking about the benefits of digital connectivity, but very few randomized controlled trials, right? So many studies leverage the expansion of connectivity, maybe going from 2G, where you don't have internet access, going to 3G to 4G, and seeing how that rolls out to measure the impact of digital connectivity. And that can give us very nice general equilibrium effects. But of course, we also have challenges with identification. But it also only gives us the average treatment effect, right? So as 3G, 4G rolls out, we can look at the average effect. But what about those low-income households, right? Are they benefiting or are they not? So I'm going to walk you through the randomized controlled trial that we have done in Malawi and what we find. First, if we go to the next slide, we can look at the contributions, kind of think about what we do in our study that is kind of novel and different. First, very few randomized controlled trials on life with and without a smartphone, right? But we also not just look at that, but we benchmark a smartphone to the equivalent value of receiving a cash transfer, right? So what is better, $70 cash in hand or a smartphone? And in the context of Malawi, among our population, that's 1 month of spending, right? Would you rather have 1 month of spending or a smartphone, right? Our design also allows us to identify what's the best mode of providing, distributing, and training beneficiaries and users in the smartphone. Is it women, training women individually on their own with other women, or is it training women with their husbands, with them? We also have short-term effects, but also longer-term effects. And that's, you know, the great, you'll hear from Simone after me, and they also are able to look at long-term effects. So it's nice because we both can reflect on longer-term effects of these interventions. And thanks to WeDefine, at our end line, we were not only able to interview and survey the women beneficiaries, but we were all the women were married. We were also able to interview their husbands independently, right? So we have very nice intra-household measures of the impact of this technology. So if we go to the next slide, I can walk you through the research design. So we're working in southern Malawi. We're working in Blantyre. We work with village development committees to recruit women from low-income households. And at the beginning of our study at baseline, none of the women owned a phone, any phone. They may have had a phone in the past, but at the time they did not have a phone. And the households, on average, only 30% of households had a phone, right? So these are your kind of low connectivity households. Nearly all of the women, their only source of income was informal labor called ganyu, in which they made about $4 per week. And so again, the smartphone was $70, right? So that's 4 months of work to save up to buy the smartphone. And our participants were kind of clustered in villages. We had around 80 plus villages in which participants were located. And so around 17 participants per village, but we randomized at the individual level. So within villages, you would get some women who would receive smartphones and other women in the same village who were in the control group, right? So it's very important for us to think about spillover. So if we go to the next slide, you'll see our overall design, right? So among these 1,500 women, so you go to the next slide, we assigned 800 to 2 smartphone groups, which I'll talk about. 400 received the cash treatment, equivalent value of the phone as a cash grant, unconditional cash grant, and then the 300 were in control. So if we go to the next slide, I can explain the difference between the individuals and couples treatment. So the individuals and couples treatment were identical. In these treatments, the women were the recipients of the phone. They received a certificate of ownership. They received a SIM card registered in their name, and they received hands-on digital training, including signing up for WhatsApp and sending a WhatsApp message. And our digital training, it was a one-off training, but we sought it to be as instructive and intensive as it could be. So the individual treatment, the women came, as you can see, they came individually, but were with other groups of women also receiving the phones. In the couples treatment, everything was identical. Women recipient of the phone, certificate of ownership, SIM card registration, hands-on training. But as you can see, they were trained side by side with their husband. And 95% of husbands came to the training, right? So if we go to the next slide, the other thing that was different about the couples training is we worked with Jeanette, a women's empowerment organization based in Blantyre. And as you can see, one of the Jeanette leaders, also at the couples group, they did a session on strengthening women's property rights over the smartphones, right? So these smartphones are going to the women, and we recognize and affirm kind of their property rights. Our expectation was the couples training, right, where you are trained side by side with your husband, right? 2 minds are better than one. You would learn together, could continue to learn together. Who's laughing? You're preempting my. 2 minds are better than one, maybe, right? and then you have this, digital partner who you can talk about the phone, right? And the husband recognizes the women's property rights, right? Okay. So the next slide, we'll see the cash treatment, right? So the cash treatment was identical to the individual's treatment, right? Where we had the same kind of empowerment training. This is a valuable asset. In one case, it's a smartphone. The other case, it's a cash grant, right? And this is for you, the women, to receive, to use as you would like. But we hope it's beneficial to you, right? You can use it, to empower yourself and also your household. Right? And you can see the women came individually and received the cash grant. Okay, so we go to the next slide. The program implementation. So you may, I don't know if some attended the last We Define conference. I presented the midline findings. Now we're looking at the end line. Again, we surveyed both participants and their husbands independently. And then after that, we did a follow-up phone survey with as many of the participants we could reach to learn more about kind of social learning. And then we've also, supported by IPA's IPV initiative, we've done qualitative interviews with everyone in our study, not everyone, but a sample, and focus group discussions, which have also been very illuminating. So if we go to the next slide, so what I'm going to do is I'm going to first talk about, okay, so what happened to the phones, right? Very important. What were the impact of these smartphones on participants' digital capabilities and mobile money use? What were the distribution of gains within the household, right? How much did the women digital skills increase vis-a-vis the men? And then what are the economic impact of these interventions? Okay, so first, mobile phone uptake. If we go to the next slide, and then the next slide. So one question is, okay, these are women who did not own phones, right? What happens when you give them a smartphone, right? Are they able to effectively use them? So if we go to the next slide. And we do find, after 9 months, you do have effective use of these smartphones. Nearly half are using WhatsApp. A third are using WhatsApp weekly, right? We show that they have mobile money fluency, that they're able to, we have a behavioral outcome where we measure whether they're actually using mobile money. We see kind of strong effects. They're using it regularly for mainly phone calls, less SMS. So we do see take-up of the intervention, which is a fair question, right? Right? I mean, these women don't have phones. Should you leapfrog to smartphones, right? We do see after 9 months some non-retention of the phones. But we also see that the cash group, we have a little bit of increase. Remember, everyone's starting at 0, right? So the cash group and even the control start to acquire some phones as well. So after 32 months, if we go to the next slide, we can see that the retention, this is showing different measures of whether you still have the smartphone. So after 32 months, only 25% of women still have the phone on their person, right? So 75% no longer have the smartphone. And that is a large loss. But also, what is the life cycle of a smartphone, right? This is nearly 3 years later, right? How old is your smartphone, right? So what we find is that women, one concern when you talk to economists is you give someone a phone, they're going to sell it, right? And turn it to cash. No, they don't sell the phone. But unfortunately, these are entry-level smartphones. I mean, these are not the cheapest phones you could get in Malawi. These are a phone one would get at the market, but they're not durable. So if we go to the next slide, what happens to phones? We find that many malfunction, right? Especially after 3 years. So if we go to the next slide, most women in our study don't have electricity at their home. How do you charge a phone if you don't have electricity? Where do you go? You go to the public charging station. Very kind of sad to read the number of phones that went bad charging at an irregular electricity supply, right? We take for granted the shelter, like all our devices, technology here at GIMPA are well sheltered in case it rains, right? Many have environmental damage and then physical breakage. So that the amount of loss, so when we think about the impact of technology, it's only as robust as the devices are durable. And no one talks about that, right? What do you think? Oh, the market will solve it, right? So what cheap interventions can we do to make devices more durable? How many people use a smartphone case, right? How many of our participants did? None. Not many, right? Okay, so the next slide. Now it's very important. We randomized at the individual level, right? So we had this roster of 1,500 people, and then we did a random draw into the 4 groups. And they were clustered from these 80+ villages. So some got a smartphone and some didn't. Would you know if someone else in your village got a smartphone and you didn't? Many of the women knew, right? 90% picked up on this. And this is very important because we do see social learning and spillover effects that we need to take into account when thinking about our effects. But 90% of participants said, yes, I know someone who got a smartphone. And yes, it increased my interest in mobile technology. Okay. And so that might account for, so we go to the next slide, that might account for some in the control group and the cash group getting smartphones. They didn't get smartphones, sorry. So we have no spillovers very little spillovers in terms of smartphones, right? So if the effect is through a smartphone, the integrity of our randomization is intact, the experiment's intact. If the effect is through a mobile phone, we have to take into account for spillovers. So now, if we go to the next slide, the husbands, what's interesting, we go to the next slide. What's interesting is that the participants' husbands had no increase in mobile phone ownership compared to the control, right? So it seems like giving the women a phone made their husbands no more likely to get a phone on their own. Why not? Probably because they also use the phone. But what's interesting is the cash husbands did acquire phones. You give a $70 cash grant to these households, to the women, and their husbands acquired phones, right? Much more than control. Now, this is not just them, I think, capturing the cash grant. The cash grant led to economic benefits, dividends for the household. That increased their spending, and that spending went to the husband acquiring the phone. Okay, so if we go to the next slide. So, one concern is individuals versus couples. Would you see any difference in access, right? We see actually no difference in access, right? You give a woman to a phone individually or couples with their husband there, their future access is the same, which was reassuring, right? One concern is you bring the husband in, he's going to take it. You don't bring in the husband in, he's going to take it. We don't see differences between individuals and couples on access. And even if we go to control, right? Access is not control. If you go to the next slide, actually on control, women in the couples group, 3+ years later, tend to have more control as measured by, am I free to use the phone as much as I want, right? Does the husband allow me support my phone use? It's not large, but it's positive. It's not negative. So if your concern is you bring the husband into this training, he's going to appropriate the phone. We do not see evidence of that, right? If anything, our couples intervention worked in the sense that the phone control among the women, the couples was stronger. Okay, what about capabilities and mobile money use? This is where if we go to the next couple slides, this is where we see differences, right? And here where it runs against our expectation. Our expectation would the couples treatment would lead, so we can go to the next slides, next 2 slides. The couples treatment would lead to greater digital capabilities. But what we see is actually the individual's treatment over 3 years led to better digital capabilities using an index measure. Digital capabilities kind of declines over time among the smartphone groups. Why? Because non-retention. But it remains strongest in the individuals group. And we have, if we go to the next slide, we look at mobile money use. And our mobile money use is an index as well, but it also includes behavioral measures. It is a very good measure of how capable you are of using mobile money behaviorally. And we can see, again, the individual's training and treatment led to stronger mobile money proficiency, right? And so, again, this is not because individual women had necessarily better access. Access was the same. It seemed like the training women on their own, if we go to the next slide, without their husband, it led to better learning, right? They were, if you look at this photo, it like sums it up. Here I am on my own, right, with other women, and I'm holding the phone and I'm engaged. When your husband's there, what are you doing? Literally, right? What are you doing? And that's great. It's good to defer to a partner, but it can also diminish one's learning. It can diminish one's sense of agency. It can also reinforce gendered structures of knowledge. Who is the expert going in? None of these women have phones. If someone has a phone, who is it? The husband, right? So you might not you might not think about it, but you turn to your husband because they're the expert. When you're on your own, you don't turn to your husband. You learn on your own. And 3 years later, that matters for actual digital capabilities. And one mechanism might be through social learning. Speaking of social learning, when you're there with your husband, what are you doing? You're huddled in with your husband. When you're there with other women, what are you doing? You're turning to other women. And what we see is that individuals, if you go to the next slide, are more likely to be more attuned to peer learning, peer effects. What are other women in the village doing with their smartphones? They're in a measure of social learning index. How much do you pay attention to what other women are doing? How much do you talk to them about smartphones? The effects are strongest through the individuals. So that might be one of the, so the very important to think of training and intervention, individuals versus couples. Okay, so we see that individual distribution of smartphone and training, it does matter, right? Increased digital, so what? What about the economic effects? Here we see, oh, I didn't have time to get to this. We can skip through this. The gains within the household reinforce what we see, that the individual's treatment actually reduces digital gender inequality within the household. And the cash grant actually worsens it, right? So the husbands in the cash group are getting the phones and actually the knowledge. But when it comes to economic effects, what we see is that the cash grants were much more effective. We see this after 9 months. So what do the women do with the cash grant? They don't buy phones, right? What do? They invest it in microenterprise. They always think, I had this business in mind, now I've got the capital to do it, and I do it. And lo and behold, after 9 months, there's like this virtuous cycle of you got the microenterprise, you're more active in your savings group, right? Things are looking good. And we see consistent economic gains after 9 months. Things start to diminish after 3 years. Microenterprise is tough business. But they still persist, and you can see this effect if you go to the next slide. But the gains are also not just through the women, but the husband as well, right? It seems like the cash grant led to better economic gains. The smartphone digital capabilities don't translate into economic gains, right? Because they're not using the capabilities for economic activity, right? Many people continue, 75% continue to do casual informal labor, piecework, ganyu. How do you get hired for ganyu? You show up at the same spot in the village week in, week out. Like a digital connectivity does not get you out of that situation. So we have to think about, are there opportunities for digital economic employment gains? This is where it comes to the ecosystem effects. So just to sum up, because I know I'm out of time, so if you go to the very last slide, you can see the takeaways. So what we see is that intentional digital training, digital interventions do matter over 32 months, right? They can increase women's individual digital capabilities. They can reduce the digital gender gap. Giving women cash does not have that same effect. And if it actually worsens digital inequality in the household. But cash grants do improve the economic empowerment of that. So we have this trade-off, right? If we do digital intentional activities, that can increase digital inclusion, but that might not lead to economic empowerment. If we do cash grants, that does not translate into digital inclusion, but it can lead to, over 3 years, lift up the economic empowerment of the house. We think maybe enough time goes, maybe those women will get more digitally included, but we see the first movers are their husbands, right, in terms of digital inclusion. So a lot to think about in terms of the trade-offs we face here and future interventions. And Simone can now walk us through this as well.
Thank you very much. I think he deserves another round of applause.
Okay, great. Thanks everybody for sticking with this. Good afternoon.
Absolutely.
Okay, so good afternoon.
Good afternoon.
That's better, that's better. We're going to end on a high note. So thanks very much. It's really great to be able to present this on a panel with Phil, because I think there are some important similarities in our studies, which are situated in very, very different cultural contexts on completely different contexts. If you go to the next slide, I guess one of the benefits of going second is on similar projects is you have similar motivations. But I do want to take 1 second to just step a bit back and think, big picture, like, why are we doing this work? And on some level, I think it's a really interesting time to be working in this space, and that we are, kind of really at a moment where it feels like there's a tremendous amount of political, social, and technological change going on in the world. And, I think as Phil had nicely outlined, there's reasons to be optimistic about some of this technological change. Almost 5 billion people now, I think this number on the top bullet has gone up to 4.7 per the last GSMA report. Nearly 5 billion people around the world are now using mobile internet. We know from previous research that phones can facilitate access to information, improve market functioning, develop all these apps and value-added services. And as he mentioned, for marginalized groups like women, maybe they've been excluded from information, they've been excluded from markets. And it's like, if you can bring all of that into a person's hand and make it easy to digest, it's really promising in terms of being able to close digital gender gaps. Now, if you go to the next slide, the challenge, of course, is that just like we see gender gaps in many other economic outcomes, we see exactly the same, in the digital world. So this is just a map from the Gallup World Poll showing the gender gap in use of smartphones across the world. And you can see that the gaps are largest in the yellow to red color in South Asia, in sub-Saharan Africa, which is precisely where we think these technologies might be most beneficial. And so I think there's a real risk here, and that if we think that in order to fully participate in the modern economy and shift, just the nature of technological change, if we think being digital is necessary for that, these kinds of gaps could serve to leave women even further behind. And so in that sense, there's an urgent need to ask, why do these digital gender gaps exist? What might we do about them? If you move to the next slide, I kind of want to show you a few more pictures from the Gallup World Poll just to understand how thorny this issue is. So this is the same, each dot is a country. You can see all the sub-Saharan African countries are in green color. So if you're especially interested in that, you can pay attention to this color. And on the x-axis here, I'm just graphing the gender gap in access to secondary education. So higher numbers, bigger gender gap. And on the y-axis, the vertical axis, is the gender gap in smartphone ownership. And what you can see is that, in places where there's existing gender gaps in education, you have existing gender gaps or larger gender gaps in smartphone ownership. If you go to the next slide, gaps are also larger when women are less economically engaged. I've kept that Y vertical axis exactly the same and shifted the X axis out to now show the gap in labor force participation. And what you can see is when women are less engaged in the economy or less likely to work, gaps are larger. One thing I think is very interesting is you can see all the green dots in sub-Saharan Africa. I guess Africa punches above its weight in terms of labor force participation gaps, and that they're low, yet smartphone gaps are higher. And if you go to the next slide, you see that gaps are also larger when gender norms are more conservative. So the Gallup World Poll doesn't have I don't think it's great for measures of social norms, but what I'm graphing on the x-axis now is the percent of people in that survey that agree that men and women have equal rights. So, higher numbers means more agreement that men and women should have equal rights, sort of more progressive gender norms. And what you can see is that smartphone gap on the y-axis is going down, getting smaller when there's more support for gender equality, right? So we kind of see that this digital access gap is kind of tied up with norms, it's tied up with women's participation in the economy, it's tied up in women's literacy and education and human capital in general. Go to the next slide. You know, I think for both practitioners, policymakers, and academicians alike, this raises a really important question, which is how should we be in the business of evaluating digital inclusion policies in an environment where there's so many pre-existing gender inequalities, right? How should I think of really effectively reaching women when we know that they're starting from a lower base to begin with? So unfortunately, I only have 20 minutes, so I'm not going to walk you through our framework, but together with my colleagues at, yeah, you can go to the next slide. Oh, no, sorry, go back. Go back again. Let's have the QR code up there for a minute. Together with my colleagues at Harvard, Yale, Warwick, Duke, you know, we've sort of done a lot of work on this in India and sort of put together a framework to help kind of help practitioners really think about navigating this process in a way that is embedded in cultural context and household decision-making power. So I won't walk through the framework, but you know, it's on the Inclusion Economics website. I encourage you all to check it out. And what I do want to spend a little bit more time on, if you go to the next slide, is talking a little bit more about some of the research that really informed our thinking for that brief, which is to focus on this affordability metric, which, you know, we sort of know is important. But so if you kind of address affordability, you know, without perhaps putting too much more thought to gender dynamics, you know, what might happen in both the short and long term in terms of women's engagement with digital technology and downstream outcomes. So for that, I want to tell you about this free smartphone distribution that was implemented by a state government in India. If you go to the next slide. This project took place in an Indian state called Chhattisgarh. On the left-hand side, you can see some summary statistics to know a little bit more about Chhattisgarh. It's one of the poorest states in India. You know, kind of around the time of our study, it's sort of been making progress in terms of female phone ownership, going from about 31 to 41% per 2020. And in this state, women are actually a little bit more engaged in the labor force than you see in other states. So I'd sort of like maybe medium levels of gender norms for India. And we started working in the state around 2018 when the state, you know, recognized that women were digitally excluded and decided to engage in a statewide smartphone distribution where the vision was that every female head of household in rural areas would get access to a smartphone with free data for, I think, at least 6 months. So this distribution took place between August and September of 2018, and the government distributed almost 3 million phones across rural areas. They also invested significantly expanding the network, so they identified places that didn't have 4G LTE access. They built towers, and, you know, kind of made some, I would say, not very strong efforts to do a little bit of digital literacy training, and also preloaded the phone with government apps with the idea that, you know, this would become a way for the government to reach out directly to citizens. Okay, if you move to the next slide. I think one thing that's kind of fun about this project is that I'm going to show you 3 sets of results using 3 different methodologies to produce plausibly causal estimates of the impact of this program. In order to learn the short run effect, we're going to leverage a baseline survey we did for an RCT where we ran surveys in 212 program eligible villages in one district of India. We just randomly assigned villages to be interviewed either 2 to 3 weeks before phone distribution versus 2 to 3 weeks after. So this is a before-after comparison. You have to sort of assume that there are sort of no other major shifts in the world within that kind of 1 to 1.5 month time frame. And, you know, we'll sort of assume that those are minimal and that differences we see between these 2 groups are due to the causal effect of the program. Over the long run, what we're going to do is a much larger survey across almost 700 villages in 13 districts across the state. And we're going to leverage kind of a convenient thing that the government did for our purposes, which is when doing the distribution program, they said, everyone who lives in a village that has a population of 1,000 or more per the 2011 Indian census gets this program. everyone that lives in a village that had 999 or fewer people per the 2011 Indian census does not get this program. And so what we're going to do is compare average outcomes just on either side of that discontinuity to learn the causal effect of the program, okay? You can go to the next slide. And so, you know, in the short run, and I should say, the government did a really, really good job of distributing phones under this initiative. And, you know, I'll walk you through these graphs because I'm going to show you a bunch of them. What you can do is that first bar on the left-hand side is kind of showing you the average outcome sort of before the distribution or in communities where there's no distribution. That second bar is showing you the treatment effect or the causal effect of the program. And these little whiskers are showing you the 90 and 95% confidence interval. So, you know, anytime these whiskers are different from that dashed line or the top of the comparison group, we know that the difference is statistically significant. And, you know, I think you sort of see, I would say, three things from this graph. You know, the first graph is showing outcomes at the household level. So does the household have at least one smartphone? The program, you know, kind of, can't see the numbers, I think around 40% of households did have a smartphone prior to the program. After, access is almost universal at the household level. And what you can see in the next two graphs is that there are sort of very large impacts on women. Women are the last one here. Where, you know, only 5% of women had a smartphone of their own prior to the program. That goes up by 56 percentage points, you know, kind of, whereas you see that, you know, men, where 21% of them had a smartphone before the program, but their ownership also goes up, right? So even 2 to 3 weeks after the program, you sort of see some transfer of those phones from the hands of women, right? This isn't going up to 100% into the hands of their husband, which is in the middle bar, as well as other household members. Okay, you can go to the next slide. And, you know, what's interesting is that in terms of ownership, this free distribution closes and even reverses the gender gap. But when we look at use, right, like are people actually using the phone for different things, we actually see that the gender gap grows. You know, these two panels are just showing us the sort of percent of like smartphone tasks in our survey that men were doing. Versus women, and what you can see is that distribution is increasing the percent of tasks that both genders are able to do, but the treatment effect for men is larger. It's you know, kind of 12% instead of 6.5% for women. So, you know, even though the phones are being given to the women, it's actually the men that are using the phone more even in the short run. Okay, you can move to the next slide. No. Oh, yeah. Okay. So that's all well and good. That's just a few weeks after the program. What happens after 5 years? You know, the answer, unfortunately, is absolutely nothing. In that, if you look at on the left-hand side, this is now in our 5-year survey. We're graphing the share of households that have a smartphone. So I think there's two things here. One, like, smartphone ownership at the household level 5 years after the program is really ubiquitous. 84% of the households in our survey, and these are very rural parts of India, already have a phone. And this program makes absolutely no difference in the long run. It also has absolutely no impact on wives' ownerships of smartphone. You can see here only 18% of women themselves own a phone. There's no treatment effects. There's also no treatment effects on outcomes like gender norms, even though we see short-run impacts there. And so, you know, there's a sense in which this distribution, like, maybe gave women a boost in terms of putting a phone in their hands, but that didn't really translate into closing gender gaps in use. And over the long run, as Phil kind of pointed out, these phones stop working. It doesn't create any stickiness or momentum that leads to sustained change. You can go to the next slide. So, you know, I think the policy lesson here is that reducing costs, like, especially temporarily, right? This was kind of like a one-off introduction to the smartphone. You know, the next phone they would have had to get on their own may not be enough to close gender gaps when women's have kind of lower returns to phone use, right? I try this out, but if there's not a lot I can kind of do or it doesn't create a compelling value proposition for me, like, why should I invest my valuable money in another one of these in the future? So if you go to the next slide, I should say going into this project, we were actually really, really worried about this, you know, in part informed by our framework, which is all about the returns to the phone and decision-making within households. And so the solution we imagined was women-centered digital capability training. We looked really hard for programs in the market and couldn't find any, so we decided to design our own. that was focused on a set of core tasks that we thought might be really valuable for women, as simple as dialing, receiving calls, taking a photo, doing a voice search on internet, kind of how to turn the phone on and off. We engaged women in small groups, so this was all women training, interactive practice during the sessions. The sessions were actually pretty short, about 45 minutes, focused on high-value skills, and we kind of designed these collaterals that people could take home showing how to do the skills that were meant to be very friendly for somebody that had limited literacy. You can go to the next slide. So this is the last evaluation methodology I'm going to talk about. So this we designed in a randomized evaluation focusing on these 212 program villages within Raipur. And we offered the training in a randomly selected 180 villages to compare to 32 controls. And the follow-up survey is about, kind of taking place around 2.5 years after distribution. So actually very similar to Phil's long-term results that you've already seen. So, the first thing I should point out is training was really popular. About 57% of women who were shortlisted for the training did attend. And what I'm going to show you on the next slides are two impact estimates. One is the effect of being offered training. We economists call this an intent to treat effect. But we know that that's not necessarily going to reflect the benefit to any one woman of getting trained because only half did. So I just compare outcomes for women offered versus not offered. That effect is a bit too small. And so I'll also show you estimates of the effect of attending training called the treatment on the treated, kind of scaling up that estimate for partial compliance. But this does assume that there are no substantial spillover effects of training, which I think is actually a pretty strong assumption, but it's the best we can do in this setting. So what we see is that 2.5 years after distribution, training significantly increases women's phone use, both in terms of basic tasks, things as simple as, making a call, picking up a call, sending an SMS, as well as, kind of more advanced use cases that you can only do with a smartphone, though you can see the sort of share of those tasks that women do is lower. And we also see significant impacts on women's autonomy in terms of being able to use the phone, kind of outside the home. Okay, go to the next slide. We also see that the training liberalized gender norms, but only women's beliefs. So women who are trained are significantly more likely to sort of agree that women are able to use, or it would be appropriate for women to use phones. But there's absolutely no change in men's beliefs, who you could imagine might be the gatekeeper of use in a setting like this. Go to the next slide. And finally, training also increased social connectedness and improved mental health. So we see significant increases in kind of the number of family members that women say they're on touch with over the phone, which is quite important in an Indian context, because usually when you get married, you're going to move to a different village and you no longer have that in-person connection with your family members. What we see alongside is that there's a significant reduction in the share of women who say that they felt down, depressed, or hopeless. This is part of the PHQ-4. We also see significant impacts on the overall index, specifically the depression components. Women are about 12 percentage points less likely to say that they felt down, depressed, or hopeless in the past 1 to 2 weeks. This is off a base of 65%, right? So this is a setting in which about 2/3 of women are feeling symptoms of depression. Our hypothesis here is that stronger social connections lead to better mental health. It may also be important to think about the fact that we did this training in 2018. And of course we all know that the COVID-19 pandemic significantly upended, just kind of the way that we connect with others and are able to connect with others in the ensuing year. And I should kind of note, and one of the reasons I wanted to put those treatment on the treated effects up there is that these effects are pretty big. So our internal estimates is that it costs us about $7 US per person to do this training. We think that if we, if it were sort of scaled and you account for the fact that we did a lot of legwork to develop it, you could spend significantly less. So for about $7 per person, you're getting a 12 percentage point reduction in feelings of depression. This compares pretty well to other sort of psychological interventions that are explicitly focused on interventions for depression. I don't have a slide on this, I'm just talking. There's kind of work showing that CBT for depressed mothers in Pakistan reduces depression by about 30% percentage points at 1 year, 5 percentage points at 7 years, for the cost of about $10 per person. You have some evidence from Zimbabwe that a similar training is reducing depression at 6 months by about 36 percentage points at a cost of $16 to $18 per person. But this is kind of an intervention that was not explicitly tailored as a mental health intervention, of course. And we do see some other effects in terms of women being more likely to access financial information at home. I should say we don't see economic effects in this setting, which I think potentially makes sense in that women are pretty limited in terms of economic engagement. And so you might worry a little bit about constraints to their income generating potential even with access to phones in this setting. Okay, so if you can move forward. In terms of policy lessons, just click through so you can see all of these, and I'll recap very quickly. This free distribution program provided a short-term boost, but impacts fade out in the long run. And what you'll see in this framework brief that I referred to is that, this may reflect the fact that nothing about giving a woman a phone is going to affect the sort of relative returns or benefits she would derive from a phone as compared to her husband. So if you're working in a setting where the deck is stacked against women, you give her new technology and her husband has, sort of can derive a higher benefit from it. I mean, these are poor households that don't have a lot of resources. They're going to put those resources to where they feel they're best used, right? So that's just not working. However, investing in women's digital capabilities yields lasting benefits. And one reason why that is like if you teach someone, it's going to increase their returns to using the phone. And so that's going to shift kind of shift things with substantial psychosocial benefits in this setting. So you can move forward. Or is that the end? No, move forward. Okay, yeah. And I think the other thing that you should think about, right, is like if you put a phone in a woman's hand, somebody can take that phone out. If you put ideas in somebody's mind, you can never take that out, right? So there's often this like need to engage in transferability of assets, which is often much easier to do than transferability of knowledge. Okay, and I think that's about it. So I will conclude, and thank you very much.
Thank you very much. I think we've had both presentations, very comprehensive. So I will not attempt to summarize. But rather, I'll pose one question and then I open it to the audience as well, or make a comment. From the presentation so far, I realize the focus has been on poor women. The first one, the income of $4 per week. That translates into less than $1 a day. So these are poor people. Now, if you give them hand phones or smartphones and it needs replacement, if there's no income effect, if they are not moved out of poverty, replacing the phone will be difficult. So we may have limited long-term effects. That's what I picked from this. Let me open up for comments from the floor. Yes, please.
Thank you very much, Prof. Chair. I'm permitted to ask persons trained from Yale's and MIT questions. Who am I to critique? I found your paper very interesting, but not surprising. Not surprising again, still with the framing, the lens of diagnosing the problem. If the diagnosis is flawed, then the intervention will be flawed. So from the whole discussion, which part of your conclusion also speaks to that, it's clear that empowerment is not a gift that you can go and give to somebody. Right? And this is what the liberals, the liberal feminists who argue, women have been excluded from the digital space, so include them. In the process of including them, go and give them phone. It will translate into nothing. Right? The raw issues which you pointed out to in the middle of your discussions are the gender inequity issues, the structural patriarchal issues that needs to be changed if we really want transformative impact. But if we don't address the root cause, which has to do with the structural issues, and we keep addressing the face of the wound, nothing, I'm sorry, but nothing will change. Lastly, I'm surprised in your findings, the very last part, I didn't hear anything about negative backlash from the introduction of the phones. Because I was expecting that some husbands would be saying that, who are you talking to? And that will increase an abuse, right? Which will increase gender-based abuse, which we've seen in other spaces. We've seen other negative effects of the introduction of the phones, porn, revenge, and all of that. But it appears that it's all, when you give them the training and they are able to, it's all smooth. So I don't know, maybe you found that, but it was shelved. You know, if you could speak to that, I'll be interested. Thank you.
Any more questions, comments? Please be brief and straight to the point.
Thank you very much. From the presentation, I wanted to see or hear from her how they have built their capacity to go into business, and through that, then phones are given to them to transact their businesses. Imagine you come to give me a phone, I don't even have a capital to trade. What happens with the phone? Definitely, by the end of it, I'll have to sell the phone to to make a livelihood. So the whole thing. Thank you. Thank you.
Thank you. But I think one of the first presenters spoke about micro enterprise. But I leave them to address your comments. Any more? Yes, please.
Thank you very much. My name is Antoinette from Soko Academy. When Phil was making his presentation, he said they gave an opportunity for the participants to choose either they want cash or mobile phone.
So they didn't choose, they were assigned to these different groups.
They were assigned.
Yes.
And so when they were giving them mobile phone, and when those who gave what was the why, the motive to give them the phone or the money? Because at the end of the day, you see that those who were giving the money gain more economically, but those who were giving the phone gain. So what did you want to achieve for them to have money or phone? I think I didn't get that side very well.
Okay. Yes.
Thank you very much to both of you. This is very insightful. So I think two questions, right? So the first one is cash versus phone. What might have been an outcome if there was kind of almost a combination of both, right? So a little bit of cash and maybe a form of system where you're not given the phone fully, but the phone is actually subsidized to some degree. And with that, the second presentation is, yes, the phone, but what are we using the phone for, right? Because if it's just a question of giving the phone, but in this day and age when everything that's like business related, income generation, activity related is very much done through a phone, and you don't have the skills and the capacity to do that, but if that was given to you, then all of a sudden your phone would have a very different role to play, right? So have we looked at it under these angles to see what would the results be and how different they would be?
It looks like it's a very interesting set of studies, generating a lot of comments and questions. Can we take the last two?
Hello,
yes.
My name is Comfort from UCC. Actually, I wanted to understand the kind of training intervention. I think it ties in with her question. I hear you say training, what kind of training? Is it training to help them use the phone, or does it have any economic aspects to it, which then we expect after they have used, you've given them the capabilities, then they can go into business, which of course then may translate into economic effect. So I'm now interested in what kind of training programs they were giving. Thank you.
Okay, and then the last one.
Hi, my name is Smith. I wanted to ask, what are the operational costs, and do you have estimate how much these people are spending on like recharges, everything on the phone? Because, or do you have dynamics of when they like realize it's spending more or less, and is that relating to backlash?
Great. So it means the audience were very attentive. Let's clap for ourselves. Yeah, they passed the test. Well done. All right. Since we started with you, I want to start with you. Yes, thank you.
Okay. It's always the perils of going first. So I'll try to take these in order and maybe leave some that were specifically for Phil, for him. So I guess, maybe first, just in terms of like, who am I to critique? Well, I hope that everybody would feel that they're comfortable, because, part of scholarly exchange is questioning what you see, and we learn from one another. So thank you for asking your question. And I think part of it was to say, maybe two things here. One, there's this question about, was there any negative backlash? Did you measure this? Yeah, we certainly did, both in terms of like men's stated beliefs around women being able to use the phone, kind of emotionally controlling behavior, and women's ability to step outside the home and use the phone. We don't see any significant impacts of any of that, so maybe that is a surprise. And I think, and I should say, like, I don't know if anybody from GSMA is here, like, I do kind of feel like these results are important, and that we spend a lot of time talking to practitioners, and I think a lot of practitioners, for very sensible reasons, are like laser focused on bringing costs down. I think a lot of people think like this is going to solve the problem, and so part of what we want to do with rigorous evidence is build as compelling a case as possible that, like this is and that's a base, right? I would kind of argue that making phones more affordable is like a first step, but you're going to have to layer stuff on top of that if we want to meaningfully lift women up. I think there were sort of some questions around, was there capacity building in terms of business? What were you kind of helping people to achieve? What kind of training intervention? Our work was very much focused on just giving women kind of the capability to use the phone and leaving it to them to decide, how it should be best put to use. If you think about something like WhatsApp, it really is a multi-purpose tool. You can use it to market and run your business, but you can also use it to stay in touch with family and friends and follow groups that are giving you information about the world. What we find in our setting is kind of my sense is that the thing that was like most compelling to people is actually the connectivity piece, just in terms of being able to be connected to others, and that matters for women's mental health, which I also think is a surprise. I think, I can't speak for like the Ghanaian context, but in the West, there's a lot of anxiety that, phones are making us unhappy and depressed and too much stress. And we find for these women who are socially isolated, it can also be a lifeline, right? So maybe the work is to figure out how to get people to that happy medium. And then I think the operational cost will be unsatisfied with my answer. We asked. I don't have the numbers off the top of my head. I do think contrasting these studies is a little bit interesting, because the cost of data in India is actually quite low relative to other countries. I think in many sub-Saharan African countries, I can't speak to Malawi, like data is really, really expensive. I think that's something that's really important to keep in mind. You can think about coming up with a $50 smartphone and coming up with creative ways to finance access to smartphones, but like I'm working on a project in Kenya where a payment for a lended smartphone is 20% of people's daily income. That's just to activate the phone. Now you have to pay for data on top of that. It really becomes a very large burden, and so that creates a set of issues.
Is this on? Yeah, thank you for the fantastic questions. To speak to Malawi, I think Malawi is one of the most expensive places in the world for mobile data. Right? It's very expensive. But actually what was striking is that the costs, in terms of the operational costs, participants spent more on charging going to charging centers or public charging to charge their phones. And that is the problem with the smartphone, right? It's incredibly data intensive, incredibly energy intensive, and we take these things for granted. So that's part of the value of this research, right? Is in doing an experiment, you carefully process trace, are people taking the vaccine, right? Are they taking and adopting the smartphone, and what are the barriers and costs and the backlash, right? And we too had a number of different modules to capture any impacts on intimate partner violence, any kind of controlling behavior in the household or in the community. And we too we saw no negative effects, null effects, which is encouraging. And again, on the social control, it did seem like the couple's treatment did have this positive effect, more so than the individuals, even though the individual's treatment, the women became more capable. And a great question about, if you give someone from these low-income households a smartphone, what are they going to do with it? They were thrilled, right? Why were they thrilled? Social connectivity, right? Staying in touch with family and friends was the number one reason people used the phones, and was quite devastating when they lost the phones. But so they were not seeing it as a business tool, an enterprising tool. And like Simone, in our training, it was hands-on training, but inevitably it was a one-off training. So we did not have the opportunity to provide intensive mobile for business training. And this is something we learned, right? But also we wanted to give them the skills to use the device, which they gained, and to learn how they used it, and to see, and definitely there's a lot more room for digital training, so individuals can see how this device can provide them with income generating capabilities. So we definitely saw the impact of the peer learning, but the structured learning around mobile for business, I think, is very important. And I think, the cash versus the phone. Yeah, like what's the motivation here? So the motivation is we care a lot about digital inclusion and digital connectivity, right? But we also see a lot of good evidence that cash transfers are super efficient and effective, right? So the benchmark is, if it's so efficient and effective to give people cash, and they know exactly how they can best use cash, why not just give them cash, right? And our study shows that, when you give these women cash, months worth of consumption, they know exactly what micro-enterprise they want to start and invest in, right after buying food and other essentials. And they do that, right? And we see the economic benefits. But what we don't see is them investing in digital technology. Maybe for good reason, like Simone's saying, because the economic returns are not there yet, especially in Malawi, in southern Malawi. But we do see that if we care about digital capabilities, because this is the gateway to nearly all of our services, right? The Malawi government, just like the Indian government, is investing a lot in digitizing services. So that digital capability that these women gain also matters, right? And if you just give someone cash, they don't acquire that digital capability on their own. So the best of both worlds, right? But we do need to think exactly. But that's something we can learn, right? Without this counterfactual of the cash transfer, we would miss that insight, right? And so now hopefully we get deeper insight that motivates future policy work and research.
On a very sound, positive note, I think 3 options: mobile phones, cash, training. And I like the point about the alternative of giving them all 3. Give them all 3 and test. I think that's the beauty of research, that you've done these very beautiful studies, very comprehensive, which I commend you. but directing for future research. Look at another alternative where you give them all three, so that mobile for business, you empower them for business. Then you can lift them out of poverty, and perhaps we'll see better outcomes. Ladies and gentlemen, we've had two presenters, one from Yale, one from MIT, who are very receptive to questions and comment criticisms. So let's applaud them for. And I thank all of you for being so active and making this session an interesting one.
Thank you.
Thank you.
People keep on learning, and soldiers keep on walking. World keep on.
All right, please, can we show them some love? All right. I was supposed to tell you what I got here today, but I won't do that alone. As a teacher, I must always inquire from my students whether they got the concept right. So today, I'm your facilitator. Please, what is your take home? All of us here. Our take home. Just 3 answers, and then that is going to be the recap for what we did today. Our take home. Oh, so we are going home like that. Oh. Okay, since the question is already, I can call anybody to respond, because we're all here. All right. You are not an enemy, please. I want to know what you are taking home. Everything that we did today. Tell me one thing. Yes.
What I learned today was our women at the rural community, they need more training, financial training, and digital training as well.
Kind of simple. Yes, who again? Okay. I have one woman, so would you learned a lot, you learned a lot. So I'll come to you.
I would say that we need to be mindful about the differences between correlation and causation.
Hi, I'm on for a fast. All right, so last person. Since I have one woman down, one man down, I'll go for another woman. Haji, are you?
Empowerment is not a gift to be handed over.
Direct quote is good. All right. So this tells me that our gathering here was not in vain. At least we all got something. And then we know the contribution we are also giving. I like the fact that with every presentation, you got people following and then asking salient questions and even giving contributions as well. So you're a wonderful audience. Please give your hands. All right. So please, this tag will be used tomorrow. So don't go and put it home and come tomorrow without this. This is your gate. In fact, your ticket to enter this hall tomorrow. So please keep it. And tomorrow we are starting exactly 9:15. Today, on a more serious note, we delayed 15 minutes, but the room was already full before we started. This tells me that you keep to your time. So I know tomorrow you come early than even today. Do we have the same, are we on the same page? Are we going to do that? Hey, as a film, no film. All right, so thank you so much for your time. And I think we need to applaud BRAC and then IPA for putting this together. That's a wonderful, yeah. I have a lot to say tomorrow about them, but today we are only, and then I think Mastercard Foundation. Please, let's. I have to give her fans because I'll see her soon. Mastercard Foundation. All right, thank you so much for your time. And so are we going to have a group picture or something? If not, we'll do that tomorrow. Okay, so the day has come to an end. Please have a safe journey to your destinations. Oh, please,